recently is as you said, don't try and go for the Pico top or the Pico bottom.
Yeah.
Now I'm just like, because I've moved to Delta clusters
Yeah.
on a
Yep.
time-based chart. So I'll just
Nice.
select like there might be two, three, maybe it's one candle, and I'll select, oh, cool, there's a bunch of shorts in these value areas here. I'll draw out like a little box and I'll be like, once, a candle breaks that value area and I know those longs or shorts are trapped, I'll just enter
Hmm.
straight away. And sometimes, that 5 minute candle that closes, it's quite far away from it. But instead of it being like a 13R, I still get like a 9R, but it's stopped me from stopped out two or three times before I actually get the trade on. So in the end,
Exactly.
it saves like my capital, like mentally, and also the capital in my account.
Mm. No, 100%, 100%, mate. Um, yeah. So what I was saying before, let's put this DR back on wherever I've got him. There we are. Font's changed on here. Yeah. So on the 5 minute, and I wasn't there for it, but when we just see stuff like this displacement go in, it's just like so clear that, we rejected off the top of we didn't quite get into that the implied range. There's your breakout, but that nice bit of displacement right there with a close back inside of this developing area, that's a short any day of the week with a stop above the high. But had
Yeah,
we
I love off
taken
5 minute.
yeah, had we taken a short here, or more realistically, I mean, more realistic, a little SFP here, which I wouldn't like to take anyway, because that would be on a lower time frame, a poor high. So it's all really nice in hindsight to say this, but when it's happening, as you know, it's a little bit harder to actually do all this. But when you saw that clear SFP through there, and then followed by that displacement, that's pretty much just means straight there for a short and the stop above the high from that point there. And then
Yeah,
obviously you could take a bit off here, but I wouldn't have, because I would have waited for that to close. This here makes you wonder, like with the Morningstar reversal. Obviously, we had the bearish breaker through here though, and then held it down. We come down, then we actually got the break. Then this was all short squeeze. A lot of it was just short squeezing out. We didn't actually even hit the deep premium of this channel. We didn't actually hit the developing value area high. We had a 9. Sometimes you get the sweep above the high. So if you're shorted there, you'd probably want to hide up around, the start of this order block. But essentially, yeah. So what ends up happening here was we roll over. So again, I wasn't around for here. I pretty much wasn't around for a lot of this actually. I sort of came in around here, so I actually just opened up a short down through here. It was pretty loose of me, but nonetheless, I'm in profit by a little bit at the moment. But yeah, we've got that break to the downside, and then ODR has started now. So we'll be looking for a retest here, or we'd also have on a higher time frame that BPR that would come through here, which lines up with the midpoint of this channel and the developing VWAP of that area there. So it's just straight away on a scalping sense. That's what you do. But obviously, you go into that higher time frame as well. Have a little bit of a look and look at the behavior of the higher time frame candles and that sort of thing as well. So, but yeah, that's essentially just having a little bit of a recap of today. Yeah, best short entry was here with your stop above the high, and at the moment you'd be cruising. But if you got in like where I did, which is sort of a fuck around in here, um, I think I've got two up around in here before I'm just going to let myself get stopped with profit, because I'm not going to deal with if something appears up here, I might be asleep, then I could have a look at it. Um, but yeah, at the moment we can obviously see this could become a deviation below this channel. Again, we could make the channel more straight. It would probably still make a lot more sense through here. We just drop that down to there.
then what's this little jobber you got down the bottom here? All these little lines.
Yeah,
What
okay. So this is a
indicator
new
is
one.
that?
I don't know if Slimy's released this or if he's just given it to me, but this is the Market Masters RSI, multi RSI, sorry. May as well showcase this one at the moment. So what this is here, not sure what my resolution's set to, but if you can or you can't see if it's negligible, we've just got all the time frames from the 4, the 1, the 5, the 30, and the 15 minute all on one time frame. So all it is just a um, it's just an RSI that, it doesn't matter what time frame you're on, you get the same RSI. Like you can see the 50 level and where they all are. So what's really cool is obviously like you'll get your pivots and that sort of thing as well. Um, but it will just sort of really highlight when those pivots, the 5 minute goes in. But there's times where you'll get a reversal. Let me see if I can find something really clean. I mean, you had what, a nine go in here. This is your entry down here, and you closed around here, somewhere around here, I believe,
Yeah,
if I'm correct.
I
But this,
closed a portion. Sorry, keep going.
yeah, yeah, okay. Well, this area here was like obviously a nine went in. You've got that. So change up my drawing tool, but you've got that W pattern go in. So we had that nice double bottom, essentially gone in. However, even on TPO, it was oh, look at the TPO. Yeah, it wasn't too bad. It wasn't like a, but um, it wasn't a buy tail. But nonetheless, I mean, we're back inside the 16 again anyway. But you'll just see little times where it's like, you'll pierce on the five, and then you just go, What's everything else doing?" If that makes sense. And I can even do, is there an example in here? Okay, so there's an example, I guess, here where the what's 30, is it 30 minute? The sec, I've got my tools all mixed up. The 15 minute. So you can see that you'd have like a 15 minute, which is like pretty poor, but nonetheless, like you can see that if you don't have to go on the 15 minute to see in between these candles here, you pretty much had like a flat line divergence. So it's just a way for me to keep an eye on them all. But the main thing I'm sort of doing is that blue one. I just always know that blue one's a 4 hour. So it was, where was it when I got a short? It was up here. Um, Maybe it wasn't on this time frame. We would have been maybe just looking at a different time frame. Nonetheless, like you can sort of just get an idea looking at them all, this is all really, it's pretty solid up through here. You got a lot of wicks coming in, showing a lot of supply, obviously. But then above the 70, my bit of a rule above the 70 is obviously like I find bulls are in control, and clearly they were in control. But then again, once you get that first entry back in here, you saw a lot of this dive back under. So again, you can sort of join in for a short from there. It's just all it is an RSI. If you know RSI, that's all it is. But we're getting all of them, all those time frames, all on one
No,
time
well,
RSI. And you want to be more clear. Obviously, you can shoot over. It can also be something where it's like, all right, that's a 4 hour, and then I'm just going to like just go and jump over to the 4 hour, and then I can actually have a look at that structure, what's going on, and then obviously the 4 hour is going to make a little bit more sense. Not sure if he actually, okay, so he maybe he's still working. He doesn't have it set up for that. But nonetheless, it's good. Just it's more of a low time frame scalper. I mean, as you know, I'm sort of running a six window setup now anyway for LTVW.
6 windows. Ooh.
Yeah, so it's I'll bring them all over, and then I might have to just actually change my share screen to, let me jump back over because I've got this set to that one window, I believe. Have a bit of a look. Where are we? Where's my zoom?
Well, it's just small things like this that I find make a big difference. You're not having to scroll between all the different
Exactly.
time frames when your level gets tagged. Even just
Mm.
like when he brought out the fixed TF EMAs or whatever it's called, like
Yeah,
not
yeah, for
having to go
sure.
to the daily chart to see where the daily 200 EMA is lying, so you can see it on whatever chart. But especially for scalping for that, that's just a massive time
Mm,
saver.
for sure. Oh, cool. They've made a thing now where I can have different screens up. That's cool. I'll just close that one off anyway until I learn more how to do this. But yeah, so the six window one is this one here. I really wish it would take me straight to the screen when I clicked on it. All right, so you can see this six different windows now.
Yeah, yeah, I've got them
Yeah, yeah,
all.
yeah. So I still just run an RSI independently on each. But obviously just on that lower time frame, I can keep an eye on them all. But yeah, all this is still, I mean, this is these two over here is just your monthly, but I've just broken it into 1 hour and 4 hour. So I'm just doing the daily 12, 4, 1 hour, 30, and 15. And obviously I also just run that five to the side of this. So I pretty much just got all the time frames. Because like candle behavior essentially is like if you have within the first like 15 minutes to 30 minutes of like an hourly candle, you're going to get a bit of an idea. It's going to start to turn around after that. So like, you're sort of looking, generally it's around the 30-minute mark is when you'll actually get the turnaround that happens. Um, so yeah, it's what I'm trying to say would be, so this one here, like it went down over here. I don't know if all my screen's open, but then you could look on, a 5 or a 15 or a 1 minute or something like that. And then you could actually have a look. So what I'm saying is if you had like a candle that, local SFP and it's pushed probably into a discount, into that discounted area. And then you come down on here and what made up this week here, and then what made up this little week through here. So you have the FVG going, and we've bounced, and then we've pushed out that FVG. So we can then say, with the 36 minute mark around that, probably happened around the 15-minute mark, then that could be a long potential. And then we'd see the Morningstar reversal goes in. And then if that fails to go in, then the next candle could have another week to the upside and you could join the short. Does that sort of make sense? We
Yeah,
can
that
sort of
does
just,
make sense.
yeah. So it's always, what you'll always find is you can break them all down, but a really good one is sort of just like lower time frame, meaning like the 1 minute, the 5 minute, even the 15 minute. But always look across. I look at the 30 anyway to break up the hour, but the hour's big enough for me anyway to find entries within. So that hour, it's just going to be like a power of three or a accumulation, manipulation, distribution type thing happening every time. So we're sort of looking at like um, if it sort of follows through in the same direction, it's going to be in the first 15 minutes to 30 minutes that it should follow through. And then that next 30-minute closes. So we're sort of looking at these two. And then we've got this, obviously got this bearish order block at the bottom of this range if it does want to reject out of. So we've got 35 minutes. So at the 30-minute mark, then I'm sort of looking in that last part of that next 30 minutes from the 15 to the 45. So it's just an interesting way that you're looking at the lower time frame. But yeah, I think it's normally definitely around like the mid hour. I want to sort of see where everything's sitting, and then obviously you got your 30-minute that you'd be looking at for that anyway. So it's just in your mind being able to sort of like constantly think of that. And a lot of flows will sort of come in around like the end. So like obviously the 5 minutes coming in at 6 seconds before it closes. So obviously like you get those people, the tape picks up and it pushes. But like, on an hourly or a 4 hour or whatever. So I'm looking at the tape right now and it's pretty hot. So we got I've got plenty of room before I get stopped. So, but like, we've got that 9 going in at the moment. And then we've also got this order block sitting over here underneath this range currently. I'll just use the full body. We might even we'll use this little 5 minute that I put over here. Just move these out of the way. Um, we might just swap him out so it doesn't get too messy to just a normal parallel channel. So I'll just come through. It's the same thing, but it's just a little bit more like less in your face. Where were we on him?
It's
That was
pretty
on a.
handy to know how kind of in the first 15 to 30 minutes of a new hourly candle, you get a bit of a direction of which way
Yeah,
it's going to go.
exactly. And it can
Because,
just be anticipated. So like if it's a pin bar or something, on the hourly or whatever, local SFP pin bar, and then that even if that closes and it's got decent volume or not or whatever, then you can anticipate at least the attempt for a shooting star reversal. And on a lower time frame, that could just be a little scalp in itself. That makes sense. So
yep,
that's sort of how I'm doing, sort of looking at things. Yeah, so just going to replace this one out over here at the moment. So this is just I like to do like order blocks and like, so this is obviously a pretty clear order block that went in up through here. So I always just sort of PD range it. Guys in Bali learned I think I teach everything's a range. So we're just constantly
I
looking
have
for,
heard that from
yeah,
from you. Well, not
every
from
single.
you, but a student was telling me. I was chatting with them the other
Yeah,
week.
yeah. So everything like and that's how I got that entry off the bottom. I closed it, but I showed the group I nailed a couple of dollars off the bottom of this run actually. Um and that was simply I mean I got TD9 turned on here. I think it was I have to look to see. We can do it after, but I can show you that entry anyway. I can just get a bigger chart up and we can pop down. And it's the TD9 just with basically one of these PD ranges going in. So, like, we're looking at trading this at the moment, potential that it's going to push up, potential for a bit of a retest. We've got a 9 over here, so it might not actually fully hit up through here. This is where the two candles had their own bit of AMD. And obviously, where does that come in as well? Well, that comes in obviously where we've got the daily previous day value area high, developing vals coming in, and then we've got the beginning of this order block on the 1 hour. So you already start to build a little bit of a story, like what are they trying to do? Where are they going to try and take it? And then we can gauge over, the next 32 minutes coming up on the hourly, just how well are they doing it? Then we can gauge on the last 15 minutes, just how well are they doing it? Um, so I can keep him just open slightly over there. We come and we can just put this little, we'll go full body. And then people are saying, oh, do I use just the body or do I use the wicks as well? Well, if it's beef, you use the body. And if it's wicks, you generally just use the body. But what you can do is we come over, we'll just pop over here for a second and we'll just put him down to the 1 minute. Don't need to go the 1 second. But we can say, well, how well did it respond to that? And we go, okay, well, now let's just go and have a look by putting it just on the body alone and see if it makes a little bit more sense. And then we come over here and then we can see, so obviously the 9 is pretty much that whole area there. The meat of it, most of the price action was in there, and this is where it failed. So in this case, I'd be more inclined to use just the body. So that answers a lot of people's questions. I hated that when I started. It was like, oh, with an order block, you use the body or you can use the wicks. It's like, hang on, what? I can use the order of the body or the wicks, but if it's a huge order block, those wicks could be, I could get liquidated 5 times in that area. So how do I do it? So I just started to it comes down to a bit of discretion, a bit of experience and that sort of thing. But in this case, we can see that we have this 9 in this area, which is pretty much should have been support. And this also lines up with discount and deep discount. We came through, we put that in, then we tried to hold above this deep premium of that block. And we fell through. We once again tried to hold with inside it. We've obviously pushed back up once more. We've fallen into it, and then we rolled out the bottom of it. So this wall that went on through here, I'm more interested in, which is lining up around here. And we also have this line through here, which is what was this white line through here? Well, that white line right at the 50% of that was the 1 hour bottom of that order block, and it lines up perfectly at the 50. So that's why sometimes you get those really, really nice, perfect retests. But if you don't, you can get if we push up here, we've still got, so we've got 30 minutes now. So now that we've got the 1 hour down to the 30, now I jump to the 30 and have a little bit of a look in here as well. So, we put this little bit of an order block in here. We have a potential FVG in here. This candle needs to close first if it doesn't fold over. And I'm not really including these wicks as much. If I were to include the wicks just out of the curiosity of where we stand, we're in deep discount. So this level point through here could still be respected, but I'm just going to see that as sort of the main area. But what I don't want to see if I were to be bullish here is weakness well and truly below that range or a rejection right off the bottom of that range. So you ever notice how like sometimes you get a front run? I'm like, I wanted to get that level, but it just sort of just taps there or whatever. Obviously, in this case, it's pretty easy because it's just an order block. But if it does come up through here, or if it even just rejects somewhere in here, like off the bottom of this low, for instance, so I'd probably just keep an eye, on the bottom of this little low through here as well. Does it line up with anything? Yes, it does. The body of a 9. So that's the deep premium of that 9. So this is the rejection area through here. If it rejects from here, it's more likely to roll harder. But if it gets up through here and fucks around for a bit, we're more likely to compress and push up. So this is the kind of thing that's going through my head when I'm scalping, just jumping in between these time frames. So, you know, um, just see, as I said, I was going to share
So before
my.
we get deeper into the weeds, with using these PDO ranges on the order blocks and for your scale, just on the 30-minute time frame and the 1 hour time frame, you're sort of seeing
Mhm.
how price interacts to like enter or potentially exit or
Yeah,
add more onto a trade.
yeah, 100%. 100%,
Yeah.
man. So, and I'm just gauging it. If I get, as I said, I'll share. I've got to work out what is going on with my Zoom where I'm sitting with this thing because it kind of just keeps going all over the shop on me. All right, here,
It's
I'm back.
quite interesting because how you're going in all this sort of stuff now, which is really good. Like it's funny how with trading, like for someone who's got one idea, someone's got the complete opposite idea. So you're running short at the moment, and I'm actually running long. I got one on just before we jumped
Yeah,
on for a
beautiful.
chat.
Beautiful. No, it's good. Well, as I said, like I'm happy to get stopped out. It doesn't really bother me, and I haven't really, been focusing too much on my trading, that sort of thing today. Um, but what I will do, we could probably just use, what have I got open here? Probably
I
got,
think that's sort of how it needs to be, eh? You need to be fully comfortable with getting stopped out, which is like kind of hard as traders, you're taught in the early stages, oh, you need to be an emotional robot, sorry, an
Yeah, yeah.
emotionless robot, yet like we're like fucking
You still
hardwired
you
to be emotional.
you still need to be empathetic though. You still need to understand what the market's feeling because if you get too robotic, then you become a bit of a jackass in a way of like, I'm just a robot. And that's the thing about like a lot of that's the thing about a lot of these trading bots and stuff. They're not right all the time because they don't have the ability to feel emotion. So we need to be able to feel that emotion um, when we're trading. And that way, but we need to be able to discern the difference between like when we're being robotic, and when we need to be emotional to actually understand if I were on the other side or if I was underwater, how would I feel right now? So I do that sometimes, for instance, like, I might watch the open interest and the open interest has been trickling up and, got these candles going up. And then what ends up happening though is out of nowhere, you get that displacement, right? And then, all of a sudden they might push up again. It pushes up into here. And it's like, well, why am I going to short here? Well, if I was one of the people who went long through here, how do I feel? Well, I want to get out. And then it's like, now it's down here. How do all of these people feel seeing this happen? How do they feel? They're fucking worried. What are they doing? They're moving their stops up. They're just marketing out. I'm done here. And that's how we get the full rollback over. So
Oh, that's a little golden nugget right there.
it's the ability to like know when to take a trade. So like when to take a trade, and people have done MM3, people who have um, you know, just been in the Discord and actually been listening and stuff. They understand the PD range, as you know it, this here. So, or I guess a good example of it. Let's remove some of this trash off here at the moment. Is this pretty much it? Just is at the moment from our most recent high to our most recent low is a PD range, right? And then you'll have all kinds of little ones in there as well. Like I love this one over here, this big inside day because it held so much price action with inside it. Like that's a little one that I love at the moment. And that there, like these all hold merit. Like for instance, if we came back down and we got a bit another retest from here and then we push, like that would also make sense. Um, and this is simply just like it's tried here, it's tried. It's got the inside break here, it's pushed down. Each time it's trying to hold. We know that we had this defender block on the TPO through here that held up for ages. We came through, we rejected off discount through here. Then we came and got another test, rejected off deep discount, came back through. Then we held on to here, like onto deep discount. We struggled to get into discount. Then we rejected off the 50%. Then we actually came through here, put a Morningstar reversal in where off deep discount. What does that mean? That means fuck you. I'm done here. I'm going higher. Then we got that nice big push up through here. And then obviously up through here as well, we had a little deviation. We can see how much the bulls are trying to push through the supply. We came down. Where do we kiss? Right off that. That's in a way saying fuck you. And now we're trading above here. So this area through here, we had that last night. So for sure, we could keep going up from here. We could get another kiss down through here. We could keep going up from here. And but that just in itself is like a whole bit of a whole bit of TA, you know? Um, and again, like looking at just, it gets a bit messy and that's the thing, but you could just put this whole parallel range to separate it. We'll just put him all the way down. Where are you? To here to the bottom, and it's just doing the same thing at the moment as well. So we just drop him for a second, retest the 50. Had a few retests right here, had a retest of premium, and now we're pretty much open up to continue chewing up through here, or we might lose a bit of steam because obviously there's a lot of the highest point of supply is where in deep premium discount, deep discounts the highest point of demand. And it could make sense to fall from here and come down, give that another test again. And as we know, or we also have this area through here. So this is more of a line in the sand that I would want to see hold. And if that doesn't hold, I'd be more inclined to definitely see both of the discount of the premium, sorry, areas come down and get a bit of a check. And when does that line up? Well, 107. So we could say we could come down to about 100K realistically. Um, and that would
Yeah,
just
that'd be
sort of
then
be
around the previous year,
yeah,
developing
exactly.
yearly value area high in the 8 week value area
Exactly. And then
high.
So we put like a level in from like that area there, just sort of breaking off where we had before we had that push through there. It's just a random little level. You just sort of just see things come through and put a Fibonacci in. Look, 50% of the FVG. That could be, and that fucks with people to not feel don't know what the single prints look like on the 30 because we're on the daily, but there's probably some single prints to fill in through there. So it's just sort of adding all these little bits and pieces together. And also, while we are talking about the premium discount range, was in Bali, I did a lesson actually, and it was a day before. I was talking about the CS9 indicator, and I think I'd also taught the premium discount. A lot of them had already done it. But I will just go and steal off another chart. If I have a CS9 on one of these. Here's a little trick as well. You can just grab hold, just click at any indicator, come over to a chart you're working on. You can just Control V or Command V it in. And there she
Oh,
is. Pretty good little tip, eh? So I'm
yeah,
just constantly
nice.
stealing indicators off things. I don't have to be constantly loading them up through indicators. So it's a little take home for you. Um, so
There's
yeah,
no
we're
way to
down.
copy levels to another chart, is there?
You can copy them, I believe, if it's the same ticker.
Yeah,
I
because
think. But yeah, you
I've
can
built.
copy the ticket. Like, if it's Coinbase to Coinbase, you can. But if you drop to another one, it wrecks them.
Yeah,
So
yeah, I thought so.
yeah, and obviously, if you want to mass grab as well, you can hold down Control or Command, and you can just drag. You can grab a bunch of things all at once. You don't have to grab them individually, or you can hold down Control and click them individually. Yeah, yeah. But yeah, so I think it was I'll have to go back through exactly what it was, but it was I mean, we just dropped down some time frames. Um, because I actually got in pretty much just off this little lowdown through here. But the thing was, so a bit of a look. Was it four? Was it the 1 hour? One or the 30 minutes sounds familiar. Maybe it was a 30. I think it was a 30 minute. And this is Coinbase, so I was on Bybit, so it could be a little bit different on here. Yeah, so no, it was this. I got up in front and showed everyone actually. I ended up closing out somewhere here because I just wasn't at home. I wasn't on my computer. We went partying. So I was like, I just don't want to be babysitting a trade the whole time that I'm trying to enjoy people's company and I'm keep looking at my phone, that kind of thing. And I did it on my laptop, but I didn't want to be the guy on my phone. So I was just sort of like set my stop a little bit too tight, but I'd still be holding that trade. It was one Bitcoin. I'll still be all the way at the top holding that as a swing trade. So it's another time I nailed a low, but it was so funny because it was the next day, it was in the morning. Um, and I was sitting next to Dax, said, "Hey, watch this." And I picked up that we had this nine over here. And so I dragged it out and I bought deep discount. That's all I did. I just put a limit long, just right in off the deep discount, nailed it, and pushed off and look at it go from there. And that's all it was. PD range, the nine. And where was my stop? Below here. Easy, easy stop. Like it's not going to hurt me at all. Like, so I got in there, had my stop below the low, 0.33%. So, and that was a great explanation of everything's arranged. But here's the thing, the CS9, TD9, whatever you want to call it, CS9 is a turbocharged order block. It is always a
Yeah,
turbocharged order block. So, like, if you're trying to be conservative and you're not just picking any old order block, then, obviously the order blocks we pick are in deep premium or deep discount to be conservative enough. But if you were someone who's like, I'm going to wait for a deep discount TD9 and I've missed the initial Morningstar reversal or whatever, and I'm just going to set a limit order because sometimes it's really bullish. It'll actually just bounce off the top of it. So you might be like, I'm just going to set one, depending on the range as well, on every single level all the way down, and then just happily get stopped out at the bottom. Then this is like a great strategy that you can do. On the 30 minute is what we did this on here. Um, and then on the 1 minute, I'm not going to load everything up, but I'm going to have to go back anyway on it. But on the 1 minute we had, I was also watching Velo as well, and I'm pretty sure we ended up with some on the 1 minute down in there had a nice CVD divergence as well, pretty much kick in. So I was like the
oh,
cherry on
lovely.
top for someone on the 1 minute who hasn't got in on limit, see that go in, see it bounce up, and you're like, in I go. And that would have obviously, we go back on the daily now, and we have a look at where that sits. That was right there. That was that entry. So again, a lot of people only want to trade, daily time frames, which is all well and good. Maybe you wait for this candle to close, and you're like, this looks like a bottom. I don't know. I still think it could go a little bit lower because obviously we had a lot of people eyes were on this low through here, which we front ran. Cheeky, cheeky. It will do that when it's very
Yeah.
bullish. So a lot of people wanted that, and that's sort of like everyone that day when this candle, when we opened here, and this candle was just like red as red, heading for it. Everyone's like, "That's the level I'm going to bid," but
Well,
it didn't
that's
get
where
it.
I was holding short too, because we'd sold off from the tariff news.
You
We
did,
come
yeah.
back
You had a
up,
good short on.
and I think it was the 10-day composite value area low we rejected off. I'm like, okay, we're not
Yep,
accepting in that composite. We're going lower. We're going to get the what was it, the previous year VWAP or I think or the previous year value area low, or at least a
yep.
retest of that high there. So I'm like, cool, 71K or 66K.
Something.
And then when we bounced there, that's when Trump was like, oh, I'm doing a 90-day pause, blah, blah,
Yeah.
blah. And I was like, all right, time to switch my bias now. The Bulls are
Well,
back in control.
that's it. Like, and that was a simple, that could have easily stopped me out. So, partly a bit of luck as well. Like, fuck, that was pretty cool bragging rights when I did it. I was able to show everyone who were there, like, this is what you learned yesterday, and this is the power of what I taught. So even though I didn't hold the trade like an absolute rookie, should have left the stop below the low, but should have, could have. We all say that all day long. Reality is we take good trades, we take bad trades, we get stopped and it runs. That's just the way it is. This is the game we play. If you don't like it, then go work a 9 to 5. Um, but the
Yeah.
thing is, I'm trying to remember where it happened. I cannot remember, but I'm sure I could cherry pick some things. But there's just been times. Okay, well, two things. One thing is when we're sort of moving sideways or down, if I ever see stuff like this, and especially not exactly the weekly, but the higher time frames, when I see like that little gap between it, I generally look for that. I generally believe, I call it you're in orbit. You're going to spin back around the moon, but you're eventually going to get sucked into, or the sun or whatever. You're going to get sucked back into it. So when you're in orbit, that's when I sort of go, I reckon we're going to hit. But there has been times, and it would be good to have an example. I should have an example. You'll get a law too. I mean, that there also the developing value area high coming up, so it's not a good example. But there was this one time where, and I don't know where it happened on the chart. I sort of wish I took a mental note, but it came down anyway, right back down to the like tiny bit off the previous week val, and then it just rocketed and it just took off from there. And so what that sort of signified to me was exactly sort of what we actually just had um off this previous, where are we over here, off this previous high. What this signifies to me though, and it's what I'm trying to explain, like, range high, when you front run it, the argument is, oh, you said it's in orbit, it's going to come down and touch it. And so here's it's a bit of a 50-50. Like, yes, it is, but at the same time, in the other hand, when it doesn't, that signifies strength. Now, what is
Yeah.
he talking about? Well, let's just say this did roll back over. Let me put the pen tool back on. Let's say this did roll back over, it came up here, rejected, and roll back over and hit into here. There is so much more chance of fluff happening. But when you get this front run and then you get some sort of reclaim like through here, that itself tells you that that is more likely to happen than something like this coming up and falling back in. Because what does that say when we don't touch that? We had people like you who didn't get out, if you're holding your short and that was your target. Maybe you did, but my point being, people who, got a great short and they wanted to get 100% out here, then it closes up through here and they go, oh, it might reject here. Or it's back in here, oh, I'm seeing lots of wicks, it might come down. And then all of a sudden this happens. Well, they're panicking because they've just lost a decent chunk down here. So they're adding to the fuel. So there's that in itself, that you're now adding people who are going, shit, I should have got out down there. And then it goes a bit high. Fuck. When it pulls back down lower and puts a high low in, I'll get out. Well, it doesn't put a high low in at all. It just keeps sort of marking up. So there's people up here who probably closed where they got in. So that whole
Yeah.
time, And then
I
there
have
was
no
those who
doubt.
woke up and just gone enough's enough, market sell, and then that's just fuel to push even higher. So there's that, but then there's another mechanism that happens. So the first mechanism is obviously there's people who are the short side of the market who are now in pain because they've seen their P&L reduce, and they're going, oh well, we'll just I'm happy, but just give me a little bit more. There's that greed coming in. The other one is all the limit orders and all of those people who are like, the moment we see a pin bar off this level, I'm all in. I'm so smart. I sold out all of this, and now I've got all this dry powder. When I see that pin bar go in, that perfect morning star reversal that we're going to get, because it's going to be perfect, I'm going to get in on here and I'm going to get in on here. Well, guess what? It doesn't happen because the whole market can't be right, and it's so obvious. So that's why you get the front run. So what is all these people with the dry powder down here doing? Well, they're doing the same thing. Just give me the
They're
higher low and
chasing
I'll get
down.
in. Give me the higher low and I'll get in. So they become chasers. And then they, and they go, they've got all this cash and they see this and they go, oh, look, all the wicks. It might fall back under. I'll get in here. Oh, shit. Oh, we're at VWAP. I can't trade the VWAP. Ah, shit. Well, now we're in deep premium. I can't trade. And guess what? They're not in. Or a lot of the people who are emotionally driven, they're now getting in up here. They've finally had enough. So what does this open up the likelihood for? Coming back down again. Will it maybe like? But the thing is, see this. This is the kind of thing that makes me say this is possible just from that, because
I,
these people here, well, maybe we want them getting in above here, right? Someone's got to be buying up here. So when you get this big green nasty dildo that shoots up through here, followed by 8 days of one-time framing, these people are now buying up here, and that's what sends us up. So it's just
yeah.
this is the importance of looking at the higher time frame and understanding the narrative. And this is just naked price action. Like we haven't even looked at TPO charts or anything like that. But yeah.
And I think like, especially like how you're mentioning before, how it likes to orbit and then it'll come back around. Just from my
Mm,
own experience from wrecking myself, like I haven't gone back and back tested, but like I think it's safe to
yeah.
say 90 to 95% of the time, that's true. It will come
Yeah,
back down and test that level. But
for
when you have a
sure.
level like that there, and then you have, I think for anybody who's listening to this, like you really need to pay attention to what is Trump saying right now because he has
Mm.
the power to push the market in either direction. So when he's coming out and saying, I'm putting a 90-day pause on tariffs, and you're still thinking that level's getting tagged, like you need to put the crack pipe down, sober up, and like
Yeah, yeah, for sure.
flip your
And look,
bias.
we can also look at something really like this. There was a few more things this year on the daily that was a little bit of a signification, right? So, we learned with smart money concepts that, ideally the order block is where you want to take the long, and the displacement or the thrust candle or the FVG is more of the signification that, hey, bulls have turned up, for instance, right? But there is also times when the market is heavily strong. We don't get the order block. We actually bounce off the top of the FVG, you know? Now, an FVG as well, like, and a bit of a habit for people to start drawing them in, for instance, is we can start drawing them in again as the PD range, right? And there's no point me really. I'm not really doing this for any old reason. But what I am doing is showing you that this FVG that was here got that perfect bounce right off the very top, right? So when you see, a pin bar like that go up, this would have scared the shit out of people. But if you had your stop below that low, back inside of this range, it's just a range. Everything's arranged. So the FVG's arranged, the order blocks arranged, that sort of thing. But there was one more little thing, and I actually just noticed this now. So forgive me for this, but we also had down through here. I'll see if I can get this big enough for you to see. This level here, high volume point of control,
Ah, there you go. You got a POC there.
right off that FVG, right off. So it's
It's
right off the top of that range.
it's never
And that's
random. Like there's always something it's bouncing off. Like it's
there's
not
always
just
something there.
there's always
So, I mean,
something.
so for instance, the way that we could look at this is like we just discussed that there's going to be times where, you know, you'll be looking at price coming down and you're thinking, okay, so the place to buy is here. So this is probably a good little example anyway. Let's just say this is price action and we're rotational with inside of this area, right? So when we're rotational with inside it, we know that this is basically for shorting SFPs of the highs, etc. for shorting. This is areas where you're going to take some profits, around the 50, like through this area here's where diddle in the middle. So you want to take some profit off if you got like an SFP or a long out of here, right? So simply we're closing longs completely. We're taking profits around that area there. We're also not buying here, but we can buy here. And obviously the best buys are SFPs because it's just the way it is. Or at least seeing an SFP before we go, okay, we're back inside of here. But at the end of the day, FVG, order block, no matter what it is, we're rotational. But here's where things become a little bit different. So I can buy here. I can't do anything here. I can close here and here, like start taking some profits. I can't short here, but I should be closing here or at the high up here. Okay. And that's just behavior of inside. That's just how we do it. That's just a set of rules. So many times it's not going to go your way. So many times you're going to take a long, it's going to reject the 50, it's going to come down, it's going to stop you out. That's trading, whatever. But here's where this is where this whole system changes a little bit. I'm not allowed to take a long here, right? And I can take shorts, but I can take a long right here.
Yeah.
So I can do an outside break. So the rules apply with inside of a rotational, anything rotational, TPO, order blocks, CS9s, obviously. I'm sure we could find many other, inside candles, for instance. So like, just a quick one while we're sitting over here, even though this is not registered as an order block, that there is actually an inside candle. The moment this opened after. So if we just put like the replay tool on over here and we drop, say to a, maybe we'll just go down to we'll go to a 1 hour or something like that. And then we can say, so would have been from that area over here, because that's the highest to the lowest right there. And then if I just drop off, might just hide some stuff that we don't need on here. So it's everything from that's all what built it. But then from there we can pretty much just see, what was actually happening through here. So, at the time it remained up here into a in a premium, came up, put the SFP in so I can short there. But as it came back down, if you're trying to take it off at the 50, you probably got wrecked. But you could look at the candle behavior, morning star reversal. You probably would have got stopped out of this. But the point being, I can't long because it's in premium the whole time. So this is just, but being the inside candle here, if we tick ahead a little bit, like from there, I don't know, we got a retest off here. We came back down inside it. We can see how messy it was. Not too sure we did. I think we just took off pretty much from there. I'll just press play for a second and see if it, yeah, just took off. So we didn't get a retest. We got a nice big thrust. We also, but what did we get through here? So we've marked out of that area through there. And then we also had here. So this is where things would be a little bit different in this circumstance, would be the moment this candle here closed, and maybe even on an even lower time frame, we could see. So, I don't want to wait around for 1 hour to close. But if we get a replay tool, can I do a replay and a replay? No, but might be able to drop to a 15. We'll see what this replay tool lets me do. There we go, 15. It's almost like I'd planned this pre-rehearsed. CS9. And then that was at the hour of 7:15. So that was the first 15 minutes that went in from there. So, you could have gone in, you got a little shift through this area through here, you got another FVG in there, and there's a long position right there. So this solidifies what I said earlier on, that we were this is an FVG. So we didn't even open rotational. We pretty much just had this strong bound out of it. But if you missed it, we got this what? Outside break. And this area through here, you don't buy in here, but when you see it close, then it's a buying opportunity. But if it closes back in here, we like to wait because that's when we can be rotational again. So yeah, a bit of a tangent based on that. But yeah, any questions that I sort of may have gone too quick with like
Nah,
inside day
nah,
and that sort of thing? It's all pretty good.
nah. Oh, yeah. Explain to me what exactly is an inside day and an inside candle like?
Okay, so
Like,
let's
what are the
let's
rules around them?
Yep. So let's just jump back, and it's really, really simple because it's just all of that price action stuff. It's no, if you've done order flow and you've done TPO and stuff, this will be a walk in the park for you. But a good one that I liked was back on the Thursday, the 5th of December, right? And this is, it's a doji, but it's getting to the point, a bit small of a body, and you'd have the um Darth Maul candle, right? And all it simply is you've got a high, you've got a low, and every single candle that trades within inside of that area is inside. So it becomes an
Right.
inside candle, and these are just inside bars. So the way that we trade this is quite simply is we don't just need to have two lines. We can literally just everything's a fucking range, nice and easy. We'll put this
Everything's
over
a
it, and then we can
range.
actually just monitor exactly what happened. So obviously, within inside of this day, the way that you trade this is wait for the edges. So every single day after this was an absolute fuck around. Now, look, there's a Morningstar reversal in there that drove you up through the top. So you could argue in that case, for sure. But nonetheless, my point being would be, the ideal conservative place, because what would have this been? More of a diddle in the middle, yeah? And let me turn it around. I've always got to do this. I'm so used to seeing it either way. So this is all we can't take longs here. Like we just can't based off this price action. Now, before we just jump ahead though, the simple way to trade these things is you've got that inside candle there. I'll just draw another one of these in. The thing is, so this is the inside candle that we've got in here. And all we want to do is wait for the edge to either break for a rotational play or an outside, the same shit over and over. All it's doing is it's giving us a little bit of an idea of like an SFP or something. So, for instance, on the daily, um, it's not really a clear until the low. That was like a little bit of go time. Now, yes, obviously this all happened over here, so it doesn't really matter. We could drag it out further, and we can see it was a bit of fuckery for a fair bit of time over here, and it carried on. That's why I actually like this range. I think it might line up with one of the composites. But what we did clearly have through here, we could look at a lower time frame. We don't need to look at the daily, but we did have that shooting star reversal, falls back through, goes in, pretty much puts that equal low in down through the bottom. Now, what do we know about an equal low generally? Well, I don't like him because there's lack of buy tail, there's lack of excess. So that's where this was pretty good. This was pretty good, but let's just take this off for a second. Let's have a look at just a simple thing. This is an equal low, right? Meaning like there's two sets of stop losses below it, two sets of liquidity below it. Okay. Now, this came through and would have looked pretty good because we finally what? We repaired it. So there's a potential long entry through there. But then this comes down, but it doesn't quite stop you out. But what happens? Well, we're back to square one again. Why? Because we have another set. So what? This comes down and stops out, comes and stops these guys out. This comes down, has this. So what are we waiting for? We're waiting for it to come down again. And that was your entry. Does that make
Oh, this
sense?
was around December, wasn't it? This was like the most
January, yeah, January,
horrid
December.
price action ever.
Yeah, yeah,
It was
exactly.
horrendous.
It was terrible. But nonetheless, you see how these things start coming up where you can see like liquidity is being brought in and that sort of thing. And then we just go back to here again, and then maybe we can, because like a bad entry is here because I don't want to be going short so close to the 50. So that's why I say like the area above the 50% is for taking profits. That's just where we want to be. The VWAP take profits, that extra, the 25% above and below, just it's a profit taking area. It's not a trade entry area, right? The entries are on the outside of it for either an outside or an inside break. Now, the argument here would be I can't wake up on, 2024 in December on the 18th. I can't go, oh, I'm going to go short here because like, and I'm looking at this from a daily time frame, by the way. Like on a lower time frame, I might be able to go, yeah, that's pretty nasty. I think we're going to go lower, and we did. But we just talk about this in theory and the rules as they are. On a daily, I can't, but I actually can take it up through here. So that's where you just go, well, if I'm on the daily time frame, and then we might look at a similar, what do we have up through here? The highest point, like this high through here if we come through and we reject, I might take we could also measure out the FVG, or we can not even measure it, but we could just put, or it wasn't an FVG at the time. So I'd be doing a whole candle body, like I'd be treating it like a Morningstar reversal type thing. So yeah, wasn't quite there, but I mean, I'm not going to be taking trades willy-nilly based on the daily. That's why I knuckle down and find the way to join the trend on a lower time frame. But nonetheless, that was obviously that displacement of the day after went in with the FVG through there. But if we do go into the replay tool, and we can have a look around here, and then we can just go down to the 4 hour time frame. So we had the 9 there. So I'm just going to try and see there's something just really brutally clear. So I mean, hourly time frame traders before it took off, I see the patterns. You don't see me draw them, but fuck, I see them. Like it's a pretty clear head and shoulders right there, right? Like it's not the cleanest thing, but it's clear, you know? So we come down through there. And then from there, obviously we have the close coming in. Let's have a bit of a
And then
look
look at where it
there.
retests there if you wanted to get an entry if you're late coming in. It pretty much almost retests like the neckline of the head and shoulders
Exactly.
before it then rolls over again.
Exactly right. And we can use other things as well. Um, I'm not going to be the hindsight champion and tell you like that's what it is. Um, there's arguments like the CS9 rules basically is if an eight is closes a what is it? The eight closes. I mean that's a pretty. We're on the 1 hour. If you have like an eight close above the 6 and 7, then the nine doesn't need to close above it, right? But like this still obviously had some merit to it, and that's obviously where we rejected from. And then this little midpoint through here as well. But I'm not really going to claim. I mean, there's probably the one thing I would say that would be pretty clear, and it's pushing a bit, but that would be this breaker block down through here. So obviously that was a down candle up. We haven't really touched it. We'd tapped onto it. We fell right through it. And then, being a breaker block, we could also have put this, maybe it's something I would have seen while, I'm on the alley. So I've got plenty of time to be studying this. But just to hindsight, I don't think I did trade this. But yeah, you can see this is what we are saying earlier on about like you can take a trade from here, like once it actually gets kicked back out, for instance, and then we could go down even further and dissect inside of that. So good way to like discern that was a breaker block as well was like obviously there how do we know that it's not just like any other block that it just falls straight through? Well, it actually gave us a little bit of a clue in, and that was by bouncing from here. So that tells us that there's people with inside that obviously there is something there. And then as we just fall straight through it, like so. The other thing as well as a point of rejection is what would be inside this little bit of a wick down here. I'll try and zoom in a bit because on webcam it's probably really, really bad. So
No,
again,
it's pretty clear, man.
yeah, nice. This order block through here, this one here, we come down and we kissed it, and that was a sign that we should push up higher. We've got some wicks in here, outside break, wanted to push higher, couldn't do it, obviously. Rejected from this 9. At the time we could keep putting these bad boys in, but we won't because we'll be here all night because we could just narrate exactly everything that happened in hindsight. But the thing is, when we fell down, we tapped into there, then we closed off here. So what happened? How did I buy the low? Well, I bought the low out of deep discount. So what did these guys do when this candle opened? They went long. Were they breaking any rules? No. Were they breaking any rules on the higher time frame? Absolutely. They're in deep premium. That's what I've been saying the whole time while we've been up here in the high and everyone's talking about going along into the all-time highs. The fuck are you doing? And then it takes off and everyone's like, yeah, I told you. And it's like, I don't care about that. I'm talking about the longevity. I'm talking about if you do this day in and day out, you are not going to stay solvent. So that is why that's one time that I'm not going to be taking along. Now, obviously, at the same time, if you saw this hourly close, why the fuck are you going long against that? Like, I mean, really,
Yeah.
there's times it will shoot straight back up in high volatility, but like you're allowed to miss those because like it becomes hopium. I just hope it goes back up. But nonetheless, what that wick there signifies is in that little area right down through here is there was people going long. So what happens when price came back up and tapped into them? They all just got out. And that adds supply. So yeah, it's nice to be able to dissect all these little things. And like, even like I tell you what, I'm really happy we're doing this tonight because this just sharpens my sword. Like I just get into my own flow where I become very two-dimensional. But being able to teach this stuff, being able to like go over this, it would be good for like people like yourself to, let's say the conditions are shit and, you may have learned enough in MM3 or whatever to the point where you're like information overload. Well, this can just be like, you know, take a handful of concepts like the CS9 and the PD range. I love these two together. Some general market structure. We look at a heads and shoulders here. Not huge on trend lines and whatever, but you can pretty much just see straight away through here. We broke a trend line, we retested it, and we rolled over. Yeah. Like you can just bring in that market structure stuff, get a handful of things, go back where you do have the hindsight, and then try and dissect it and go, wait, why there? Why there? Why there? And I mean, this is a really good example. Obviously, if people want to go back and look at early mid-December, is where we actually had that breaker. So down candle, lots of people went short, lots of people sold into it, pushed up, didn't let these people back in, put that head in. Obviously, put there's a nine through there as well. So for the sake of while we're on here, we have a bit of time. We'll draw it in. So the same thing. We have this nine. Now it is a smaller candle, but we'll have a look anyway, nonetheless. So I don't even know if it got to the body. If it did get to the body, that would make sense as well. And it did get to the body. So like if we went down on an even lower time frame, we need to go deeper. Um, we went down on there. Well, look, 15-minute, nine, right out of discount area, rejects. Perfect, roll over. And that was coming off the 1 hour, wasn't it? Was it the one? I think it was the 1 hour that we had there. Um, yeah, 1 hour nine. So see the nine with another nine rejecting out of it, falls out of it, rolls over, eats a cock meat sandwich. We know that that solidified that being something important. Came back up. We had the same thing that happened there. It just happens over and over and over and over. So it's like when you can start to like just do this like all the time. And the one thing that would have fucked me years ago trying this, I'd understand it was this. That's what I'm looking at. I didn't do my higher time frame work, right? But
Yeah.
this now helps me make so much more money because I know on the daily, we're back at this point of time through here. I've looked at that inside candle and that's signification. That's my framework and that's what I'm trading off. Now you could be like, how am I supposed to know to use that candle and whatever? Well, a more broad framework, which, we'll be sitting here all night. We could talk about TPO and composites. Now you did a great video the other day on that, which is like, this is it's above this price action stuff, but it really gives those big, thick, like we're not just looking at 1 day, we're looking at multiple weeks or multiple months. And those levels there, that's an even more conservative approach, especially monthly. It might take half a year to get to it. But when it gets to it, you know what to do. You've got a good idea, you're geared towards it. And then you come down on the 15 minutes and the 1 hour like I am. But the difference is it's a little bit more stressful because you're like, this is the big kahuna. This is the one that could be the trade that, rolls into the 100K trade, But other than that, on a lower time frame, rotational with inside a few day composite, opened a balanced D-shaped profile the day before. I'm expecting the value area high and the value area low to roll. So I'm going to knuckle down and do the same analysis that we're doing on the 5 of the 15. And that's how we're going to scalp it for the day. And if I'm wrong and it decides to off we go, I'm stopped out, but I may have got a few good trades in. That's the cost of business. And then I just reanalyze. All right, well, we're marked out of there. Oh, look, we're inside the 16-day value area. So I'm now going to look for that and any other little bits and pieces that's within inside it. So that's long story. Too long didn't read version. That's an inside bar. It's basically where you get like a doji or a Darth Maul, and then each day's traded with inside of that.
Yeah,
So
gotcha.
they,
Hold on, give
they
me one
happen
sec.
all
I'm
the
just going to put this blind down because the sun's right in my eyes. One
easy,
second.
mate. Yeah, no worries at all.
Alrighty.
Sweet as. All right, how are we going? So with this inside day, as I said, like when you have significant things like with a lot of price action, like that, you can just experiment and see what you're getting, So obviously this one here, it's still climbed up these levels on the inside. Then we could also look at like this eight was an inside day at one point. Now there's inside days all the time, but like if it's a day or two, I don't really give a shit. I like the big ones. I like the big ranges. Like this one, just change this color again. That's a shit color. That's better. This one through here was obviously a big one. So I really find that's quite significant, especially when it's more of a doji or a Darth Maul. Why? Because both sides got fucked and both sides are underwater. So that's really going to tell me it's going to be rotational while these people sort themselves out. So we've got fresh money coming in gambling and we've got heaps of people trying to get out. So we've got demand and supply on both sides from both mechanisms, that being people getting liquidated, people covering, people adding, people, like, so that's what you're going to get with that. But obviously, like the eights and the nines, as I love. So we just look at things like people like, which one do I use? Well, here was an eight, and then we can drop it down to it's all the hindsight stuff is what we're going to be looking at anyway. So we're allowed to do this. We're allowed to go, that happened over there. What's happening over here? So, for instance, this actual nine itself, which is like the candle, but the eight has significance as well at times. You know, we had that retest, 50%. This looks good. Off we go, up to all-time high. Then we came down, we tried to hold on to it, fell through it. Then after here, it just gets a little bit messy, and then picks back up again. And then obviously we had this retest here. So there's plenty of reasons as to why I would be looking at that one as well. We can then have a look at the actual eight over here as well. Um, and yeah, pretty much the same thing. We're having these retests. So all of these levels can come in where you can sort of, I mean, you could draw these all over the chart. I mean, we sort of could draw them all over the chart. This is a bit of an idea. And then from there, like you can just start dropping levels in of like high confluence areas. So obviously we can see that area through there. And then if I put in like that one through there, and then I could just put another big messy one just over the top of that whole thing, right to the low. And look where it lined up. So this is actually just an example here. When you do yucky shit like this, all you're doing is like there's a level there, a level there, and a level there, but make it really easy for yourself. It's just the 50%, and that's it. So this is an example right now. Why don't we diddle in the middle? Well, reason for that was because we have, didn't realize this is going to take so long, but yeah, we had all of these levels here, and that's why you've got all of these conflicting. You got that one, the zero, the 2.5, and that's by the five lines up there. So, in this case, you know, it was working more as a level to do such with. But generally, this is the same example as like if you went across all the little time frames, and why you wouldn't be trading around at 50% is because you're going to have like a lot of conflicting levels with a lot of people looking, um, at at these different levels, and that's why it's going to create like chop in those sorts of areas. So yeah, that's pretty much PD range and yeah, the CS9. Is there
I
anything
like
you wanted to cover? You were saying with the trend reversal, you wanted to, or with anything, you wanted to have a look at how you can have that delta, show you where those delta bars and stuff go.
Oh yeah, I actually
Did
clean
you work that out?
levels. Yeah, I ended up working that out. And when I first messaged you about that, I'm like, I don't understand this. It's because usually when we're talking, when it's your morning, it's my night just
Yeah,
before I'm going to
you
bed.
just
And then I
cooked.
woke up the next morning, I'm like, oh right, yeah, cool.
Yeah, yeah, yeah.
Bids minus asks, and then this is just a little like drawing of it.
Yeah. So if I let me see here. I think this, can you see my trend reversal on here?
Negative.
Negative. Okay, I might need to change which screen it's on. I think it's on. What I'll do is I'll just jump back over here again and I'll just reshare. Let me get rid of that. Share. Just share the actual software. Right, you can probably see it now, yeah?
Yeah, there it is.
Sweet. Okay. Yeah, so with these, there's two things that you can add on them. And this is more just anyway for, geez, it's really small. Might be what Zoom's doing to it. Anyhow, that's like something I need to actually work on fixing when I'm on Zoom. Yeah, OFA down through here. So you can have CS candle statistics or delta, the delta min max ratios. So these arrows up here, this is the let me have a look, the CS candle statistics. So we can just basically see it's just a quick way of seeing like what have you got? Your volume, your finalized delta for the candle, and then your where your point of control sits. So that's what's in each of those areas. But when you see the arrow, it means we closed outside of value. So down, we closed outside of the value. At the
Ah,
moment, we're
okay.
inside of value. We closed outside of value. So it's just a quick way of saying. So obviously we had this B-shaped candle in the low. And then I sort of look at all the volume that led into it. So obviously there was 6.5, 29, 46, then 40. So obviously these two candles were pretty high, 13, 8, 3.2. So yeah, you sort of look for like the higher volume anomalies, like where people got rinsed, wrecked, that sort of thing. Then yeah, we had so we also look at the negative, the finalized, which is negative 15. Then we had the negative 17. And that was quite a discrepancy between the 1.8, the 3.4, the 2.2. So we can obviously just see with the volume and with the delta, things were picking up. The open interest obviously increased, telling us that there was a lot of fresh people going short into this low. Um, and yeah, this bar would be nice if it was a bit bigger. I don't know if I can do much delta min max. Does this do anything? No, it's just moving it up and down. What's that do? Oh, it makes it bigger. That's all right. That might help. Still can't really see the text, but anyway. So all that is we've got down here the delta max, the delta min, and the delta. So delta max was I so yeah, delta max is like the highest ratio it moved towards, and min's the lowest it moved towards. So what that means is if this is zero through here, this is the max and this is the minimum in this candle instance. So we open with like zero delta because nothing's actually happened, the difference of market buying and selling. But we can see here that we had the finalized, where are we? The finalized delta of negative 17.3 million. But at one point, it went to negative 18.2. So it went all the way down to negative 18.2 on the delta. And then we can see that the minimum was somewhere along the line. It just went to about here. So somewhere in here, this candle was worth actually was at 434. So it could have been um, right at the very start when the candle opened. You would have had a few people going long, but very quickly it can tell us that heaps and heaps of selling happened, heaps of shorts opened due to the open interest, and we ended up closing at uh, we ended up closing around here, which was the negative 17.3 million. So what that would have happened, that could have been essentially the like what happens is it comes down, has a full amount, then there's market buying coming in as well. So that maximum is like it can go either way. It could be like if it was long, it'd be a maximum of that way, and it could only be a minimum.
Yeah.
So it's just telling us that during the candle's life, there was not that many people buying it, but during the candle's life, heaps of people were selling it, and then obviously it picked back up. But that 4.34 just tells us somewhere along the line it was positive, and that means probably when it very first opened, it was like boop, and then it rolled over and had that full amount, and then obviously the market buying comes in, changes that number from negative 18.2 to negative 17.3, and that's obviously the market people buying. There wasn't that many of them, but obviously these people were getting liquidated, and then the passive limits probably started stacking up underneath, and a lot of people puked. A lot like not puke, them like market puke, but a lot of people further up through here would have removed their market, their limit cells. So obviously people just like, oh, I'm fucking stepping out of the way of this. You know, people like me, if I was like, for instance, I was following this down, chasing, blah, 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 blah. Oh, take it off for a bit, keep chasing. And then I see that go in, and maybe closed up through here, or even you can use a lower trend reversal. You may have had a B on a even lower one. You might go fucking I'm out. Like, and so that revokes all of that, and obviously it just starts to gravitate back up. And we obviously had the arrow as well, so most of the value area was in the low. The point of control was right at the very fucking bottom. Love to see that because obviously that's the maximum amount. So what is it the maximum amount of? Well, we know from the finalized delta of negative 17.3 million, we know that it's mainly shorts. Are they fresh shorts? Well, mixture, but obviously a lot of longs closed out too. But we know it has open interest. So people are interested to go short there. And that's how we get that nice push. So the next candle after that, we could look at this now and go, okay, Delta, it closed with 3.8 million, had a maximum of four, so it pushed up higher this way. And then here's the funny thing about this candle. No one market sold in this one at all because the
Oh,
lowest
there's
was
zero.
100,
Oh,
yeah, yeah, it was
105. Are there any?
105. So 105 was like the smallest basically amount, and it may have gone back to sort of yeah, so it's gone to 105 and then it's gone all the way up to four and then it's come back down. So in the life of that, it could have just been up, down, but all it's saying is it never went back into negative delta. Otherwise, it could be like 100 negative. Like once upon a time, that candle was red. And yeah, so basically that just didn't happen. Then we move on to the next one. And then this is where we had the negative 194 down through here. So as far as the market buying and that sort of thing happen, that's sort of how we can look at that. Just it's telling us the candle life. So you can do it down through here, but this gives you like a really nice visual representation of like, you know, for those who might be watching this who haven't yet done this or got into order flow, pretty much like the only candles we give a shit about is like sort of like maybe that one and that one. And then obviously you're going to babysit through here. And then you see that and you see a bunch of buying imbalances. I'm going back on trading view after that. I'm done on here. I've closed it. I don't really give a shit. Because trying all you want to do is irk yourself out looking at every single candle and looking at the data of every candle and going, oh shit, or yeah, do I close it? Or I don't know. Whereas you can pretty much like see like this happen through here, and I'm just sharing the screen at the moment, but just go back on trading view now and look for your nice clean candle. Oh, we got the imbalance come in. We've got a breaker block we could probably be bouncing off. Now, where am I looking at taking profits? And if you've identified that you're going to be taking profits at some sort of level, you can bring it from TradingView, or you can bring it from the TPO charts, or I've got levels from years ago, so it feels that they're still respecting because, as we said, everything's arranged and stuff. So I sort of keep them on there, and I'm like, don't know where you're from, but you're still being respected. I mean, look at this Monday value area high from when? I need to update this chart, but like it's still respecting it, and I don't know which Monday that was, but like it's crazy. Like these levels, these TPO levels and stuff. Obviously it gets some crazy volume, so it should probably need to move up my Trev. But three stack poor high over here. The previous day value high, the 7 day CVA, and look, it just like it was right in between them for a bit of time. This is I don't know if this is a data issue we've been getting, or it's just such high amount of volume, or it's bots or whatever it is. But nonetheless, cleans itself back up and it keeps moving through like so. Got a yellow line over here. Don't know what that's for, but I know it's pinged off that a few times. I do need to go through and clean it all up. But my point being is like the first thing you do is you see a B-shaped profile, and then what are the ingredients? And that's just telling me the ingredients. And then it's like the unfortunate thing about just seeing a numeric value, as it's going in as well, as it's like my brain doesn't work to be able to see them moving all at once. And I'm like, what's it doing? But with that, I can physically watch this bar. So we can go and pretty much watch the bar at the moment, and it's don't have a lot of volume at the moment, but we can see we have it's currently sitting at negative zero point 0.4, but it has been at 1.1. So at 1.1 it was up here, and now it's come all the way down to negative 3.5. So we've got zero point 0.1 of a million basically that's been trying to push this back up. But then this candle here, open interest 3 million, 7.1 million is where it closed. It closed on that and only went to negative 460 at one point. So I'm expecting these guys here to hold. That's what I want to see. I do not want to see it fall under that. And that's pretty much how it goes. It doesn't hurt. Like you can look through like the thin spots, could come down and bounce off it. But ideally a good trend would be like imbalances, pretty much holds off the top of it. Have we struck these imbalances? No, we haven't. but we have got a thin spot through here, right there, and that's pretty much where we struck straight off the top of, which is this little area through here. And these things, if I change the tick size, well, there you go. We'll use an 8 at the moment, and you can see it did bounce off it. So that's the thing. Like, I'm not huge on looking at imbalances and stuff because you can break the candle down more and more and more and more, and you can, get a better idea. But what I'll do for tick size as well is just sort of like look at the last few, whatever I'm trading. I'll look at like the last few highs and lows and just try and see, is it clear? Like zoom out basically. Um, I find it too messy if I have that stuff on. Um, so obviously, that wasn't the best one. But when you go through tick sizes, you sort of get a bit of an idea of what looks good when you zoomed out and what's been working and what's not. So I think I had like a 7 or something before, but if we just come back down to, yeah, I mean, that's a pretty clear B-shaped profile. And like, that's just a good long entry. But like, we can't just go in here and go, let's go long all the time because we could probably find some other good B and P shaped profiles. Like, if you just look, if you ignore everything to the right, like there was a P shape and it rolled, but like you're in no man's land.
Yeah, it needs
That
to
was
be at a
like your head
point,
and
an actual
shoulders.
point of interest.
Yeah, so you need to have those levels that are set, but that's why it's so important. Um, I think I shared it with the group anyway. Romp sequence of priority, which is like, market structure first. Then after that, you want some volume, obviously. So like lower volume, it's not going to be as trusted as much. Volume, I sort of would include myself with Delta. But let's not get ahead of ourselves. Obviously, that we just class it as order flow. But we just need to see volume, obviously. So for a supporting trend, we want to see volume increasing. We have or decreasing on a trend down. We could say, well, hey, all it's going to take is interest to come back in. It's going to push up. It's really just the watered down version of like CVD. Um, and yeah, so the next one up from that is time, obviously. Time being TPO as well, time priced opportunity. Where's time been spent the most? But time is also like the session. Asia's flatlining, it's
Yeah.
going sideways, then, well, I'm expecting London to put in potentially a Judas swing, AMD. Then I'm waiting, maybe if it's bullish, it's going to put a temporary high in and pull back down to like, even the Asian lows again, as manipulation. And then New York's going to come in and continue it in that first direction. That fucks everyone because they chewed all their money up in Asia. Then they got screwed because they went short into London and then it took off. It put the fake high in, where they finally switched to go long, and it rolls back to 50% of Asia or the top of Asia or down near the bottom of London again. New York comes in with a bit of inducement, and off she goes again. So it's just like people, if you understand that with time, like people are just constantly chasing all day long, losing their money. So it's like, but when you get an idea of like, hang on, I've seen this before, it does, you know, Asia, London, New York, oh, we've got a sideways Asia. I'm expecting this from London, Or if it's a trending Asia, then I'm not going to trade London. And I'm going to see if London gets destroyed one by the other, and I'm going to trade New York. So that's the
Yeah.
time element. And then the last element is what we are looking at right now. So I don't really like to class TPO at all really in with order flow. This is more order flow. This is like we're really getting granular and we're really looking at all these nuances. But the thing is, when it comes down to TPO, it's sort of its own class of like it's like a hybrid of like market structure and a hybrid of time. It's those hybrids together because as you did that video the other day, it was great, which is basically just showing like how powerful those composite levels are. Like the LTVW is one thing, which is all well and good. And, you can make plenty of money off that. But I still just feel like it's just like one step up when you get those composite levels, like how much they're respected and how it just adds that extra really strong level to your trading. But if someone were to say to me right now, which one should I use? Both,
Yeah.
really.
Yeah. Both.
Both. The bottom line is like, you're going to get the best of both worlds. One thing that you're not going to see very clearly with this composites, unless you master really understanding the shapes of the profiles and stuff, which, we're doing that, but it's a steeper learning curve. And there's so much art in TPO as well. Like, yourself, you're like, was it like the 10-day, 11-day 10 or 11-day profile? And you're like, where's the 16 come from? And it was like,
Yeah. It
yeah,
changed
because
everything for me.
that to that to that. And it's like, but then it was sort of like, how earlier I was showing you the PD range where it's like, just try it out. Like you get skilled enough where you just go, I just don't like that and I'm not using it. And like it feels pretty good when you're right, you know? So, or the other thing as well, when people, when you learn something new, like I was showing you, is, um, and you know, if I actually just jump over at the moment to what we're talking about, I figured I had it up so I can actually show people. Just got to scrub. God, this takes a long time when I'm not on my ultra wide. Okay, so we originally had a what was it? Was a how many days was it? Was it an 11
It
day
was
profile or 10?
10 days, and then you had that massive deviation below, but then the next
Yeah.
2 days formed a 2 day composite within the 10-day composite.
Yeah. So essentially, like, this is not wrong, and this could still be marked on your chart to keep it. So there'd be nothing wrong with keeping those levels. And I would suggest doing that when you're not sure. But the next thing would be, so again, just for the argument's sake, in case people haven't watched this, when we have these profiles, like so, if we have at least 50% overlap, we merge them together. Now, does that have 50% overlap? No. But if we had another profile that looked like this, now by the way, I'll change the color of this, but let me just add, this is the value area through these. So we're not including the light shaded ones on my profiles. We're looking at this bluey color. So if it's not 50% of the bluey colors, we don't merge them. So this is a trending, so we don't merge them. But this one here, though,
Wait,
we
hold
can
on.
clearly
That
see.
none of that's is that coming up on your screen, like what you're
Oh,
drawing there?
you're not
Obviously it
seeing it.
is. Nah.
Damn it! Of course it's not. That's cool. I wonder if I can do a screenshot of it. Oh, it probably won't work anyway. Let me just. Is anything drawing at all? It wasn't. Let me see how
No,
this pen tool
nothing. Hold on.
goes. I'll see this pen
Nah.
tool works.
Nah, that's really weird. Nah, I can see your mouse and where you're running with it, and it says
You can see this
brush.
brush though I'm using
Oh,
now.
no, yeah, that's coming now. It
Okay,
wasn't at the start, but it's in
let's just
now.
start with that. So essentially, I'm going to reset this profile and use this as an example. So where's my brush gone there? So this dark shaded area through here is value. And what we want is we want to have at least 50% of, so we work from left to right. So we always start from this tool is going to be fun to use. We always start from, I don't know if it's working now. Of course, it's glitched out on me. We go from this left and then we go to right. We never work from the other way around. So we go over the right, and so on. Now, if we have 50% of this shaded area within or overlapping on the outside, we migrate them together. So that goes all the way along. So this one here is a yes, would migrate together. Then I'll have to show you, I'll actually delete these now. Let me see, where have I got brushes? I'll get rid of you. And so we merge these two together, right click, merge TPO. We now have a fresh 2 day composite. And then we have the 50, is 50% the next one? Yes, it is. And we have this area through here. Now, is 50% of the next one? Now, this one here is, even though it's a yes, there's something that I would mention. We can see this little red square where it closed and the green where it opened. If this red closed further up here, I would almost feel a little bit hesitant to merge it. Just because, but it's 50%, so I would still merge it, but I'm telling you I'd feel more hesitancy because we're starting to trend from there. But because we
Okay.
closed all the way back down here, then we've now got this, what are we up to? 3, 4, 5. They're really easy when they're inside them. 6, 7, easy. 8, 9. I miscounted. I think I was counting after. So it was 10. So, but that's a 10-day profile through there. Now, would we merge this one through here? No, because it's not 50% with inside these areas through here. But then we start a new composite and it's gone pretty much at this point, keeping in mind. It's going to make this easy because I've got the other composite on there. It's probably going to be a little bit confusing for people. Let's see if I can make it a bit bigger. Everything's a bit whack on here. So that 10-day composite is actually these yellow lines at the moment. Okay, so we can see we wouldn't merge that one there. And then this new one starts. So at the moment, this is a singular profile. It's not a composite because we didn't have 50% overlap here. But then this one here happens. So it's open down here, closed up here, 50% yes. Now, pretty much from this point here, I still haven't really merged it in here, but I have an option that I can. And the reason for that is we've got this composite here. Now you probably I saw trending. Let's just reset this. I sort of saw a trend that went into here at the moment. And some would argue saying, yeah, you can merge them in straight away. Like once that closes, you can absorb these two straight into it. Why? Because this one's closed in here, and that's just a deviation. But nonetheless, say like, let's say we didn't. Let's say we're not too sure yet. We merge these two. Now, what happened to the next day? Can we merge it? No, we can't. And then what's it done? It's pretty much respected the bounds still of the 10. That's fine. What about this day through here? Now, again, I don't love it because we've closed down here, but 50%, I'd say, yeah, you can. So now you got the two. And then pretty much from here, you've got this one down here from its inside. But we just take a second to zoom out and see what we've done. We have pretty much just got these two in here, these two in here, this one in here, this one here. It's just going to get sucked into it. Maybe in a other software would let us just exclude this one, and it would be more accurate. But what I would do from there is we've pretty much got these two inside of that 10. We've pretty much got these two inside of that 10. And that's where I pretty much just go from here, absorbed, you've been absorbed, and this one closed inside it as well, absorbed. And then from there, we can see that we opened, we fell straight out of it. We got a retest, and having that 10 day still good because look how perfect it retest off that 10-day. But then look at the 16-day with how we pretty much rejected. So this is the best of both worlds that we've got through here. So we went all the way back over in time now, these levels. We have a bit of a look at them. We've got the 10-day up through here that it's rejecting off, but we can see we didn't hit the 10-day there. So if you're looking for a short at the 10-day there, well, you would have potentially got it from the 16-day. And then the 10 days getting pretty swept up through here, but we can now see obviously that previous day, we're respecting that 16-day a little bit more than that 10-day was. But again, having both on is not a bad idea, but why would I prefer the 16 over the 10? Just because it's going to keep me out of more trouble. I might not get in as many trades, but in this case, I didn't even get in, but I would have got in. But in this case, if I got it, try to get in around this 10 down through here, wouldn't have been ideal. But at the same time, through here, the 10's pretty good. But, we got in further down through here. We've got a few things that's going on. Reclaiming the 16, reclaiming the 16, reclaiming the 16. And it doesn't seem like it's being held down too much there at the moment. But yeah, obviously that's sort of just a way that we can look at the 16, but we can keep on both profiles. We can see if they fit. And so this is the latest one that's going through here at the moment. So obviously we've come up, we've put this one in through here. We've got the 50% overlap there. We don't have it through here. We cross this one over through here. We can add this one in over here. 50% overlap there. 50% overlap. And from there, you could say, I'm not too sure. And then, but again, because we're pretty much within side of that through there, I'm going to be adding them in like so. And then from there, we pretty much had a push through there. We broke back down. So you can merge these two in, which just gets absorbed into that one there. And then at the moment, that's pretty much where we sit. So I had this composite here, which we could be coming back down to retest the top of. But we did open right underneath that 16-day, pushed up. We pretty much tried to hold off the top of it. And the way I would sort of refine that level though a little bit more would be looking at this ledge. So these are called ledges, and that's just where you have like a more than three horizontal stacked. It becomes a ledge in that area there. So if you broke it out, and looked at that ledge wherever it sits. Let me put this back in for a second. So it's about a tick down from there. Um, a lot of it's probably happened through that area through there. That's correct. Or was it one down from there? Yeah, there. So that little box there, that box there, that box there, that box there, pretty much created a ledge. So the way that you'd see that would be, that's right, I can't draw with that. The way you'd see like price action would be like where it comes up and then it puts that high resistance high in, and then it might do something, then it rejects from that sweet spot through there. That's
I
sort
don't
of
think you've got the tool selected for that one.
just using my own thing again, am I? Okay. So that's where, let me see if it goes. So that's where that would go up. You have a high through here, it might come down, come back through here, and that's where you'd come through and you get like rejections like that coming off it. So that just sort of creates a ledge with this high resistance where lots of people went long up through this area and they got out down through there. So that's just like the should I open up? I actually did teach. I've got some. I'll be adding more of this educational stuff anyway, and I can do some videos exactly on these. Like it sort of comes down under the high resistance liquidity runs and low resistance liquidity runs. Turn those brushes off. But that's sort of what we're getting when we get those ledges come through that area there. So that was because we had what? So we go expand 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's a 11-day profile, little edge through there. And the reason, yeah, I brought that up is because it's pretty much where we closed and then reopened from that point. Then it sort of makes sense. Expand the cluster. Yeah.
The
We should.
price action in the last few days has been interesting to say the least. It's like, oh, are we breaking out of this range here and we're going to push to the all-time high? Nah, oh, I think we're going to nuke off here. Nah, are we rotational? It's just
I know. Hey,
very sporadic at the moment.
I know. Hey, no, it's pretty crazy. Hey, probably share. I would just share this one again. No,
But something I also tried to ask myself, because now we've accepted back inside the 16-day composite, I trying to ask myself the question, like eventually, like we don't know when we're not going to be rotational within that composite. We're either going to break out of it to the upside or the downside. So now I'm
yeah.
kind of asking myself the question, like, okay, is there enough like strength in the market to do a full rotation now to the value area low? And then something like I sort of think of, I'm like, it's not the cleanest, it's actually pretty ugly, but we sort of are forming like an ascending triangle. So maybe then we get a failed auction, or like, we could still get down to the 16-day value area low and keep the ascending triangle, and it would put in a massive 4 hour pin bar or something. Like I sort of used that thinking process when we rolled back into the 6-day composite or whatever before we
There's
expanded
yeah,
the other
there's
day. And I
definitely a
saw
lot
that
of
there was,
hypotheticals. There's just going to be times where like there's just not a good clean read on the market, and that's sort of where I just sort of override my thoughts. And my thoughts are just like for spot bags, yeah, I want to go all time high, but it just leads us back to that. Um, what do I have open here? It leads us back to just like we're in that deep premium. So like I just need to be favoring shorts on the
yeah.
on a scalping sense. And until I break the all-time high, or like if we open up, I think I'm probably a bit of a mess, but I've got that range. Which range am I using through here? But yeah, essentially until we get above this, um, yeah, until we get above sort of that area there, got a HV point of control through here, then I can start to look for lower time frame stuff to push out of here. But like while I'm inside of deep premium, I don't really care much for going long through here. I'm more keen to get a long from up here than I am to get a long from here. But I'm even more keen to get a long from anywhere. I'll try the VWAP, or if I'm really wanting to push along, I'm looking for down here just to show some strength coming back off this area. But I mean, had a bit of a triangle through here, so it could make sense if we push higher. But at the same time, like if we just fold over and come back down and then retest out of that area there. Like that'd make sense. Like the market can and will do anything. And yeah, we need to understand that. Sorry, I just sort of just cut out for a second there. Um, but yeah, what I was without going off a tangent, obviously, like with that, I might get you to share your screen in a sec if you wanna if you have any questions about things. But this is just going back to what we were pointing out earlier on, actually, and it's having a little bit of a look at it. This is where I drew in this level through here, which was the top of that nine. And then obviously we wanted to see some strength back up towards this order block, but we didn't get it. Now, obviously, there's still this order block down through here, but ideally, I would have liked to see a little bit more of a go. But then we can also go, why? What happened here? Well, what happened was, so why was my draw? Oh, I've still got that fucking drawing tool on. Obviously, we got the developing vowel coming down, the previous day value area high, and that was the area that, would have looked good. But because of that, can we compress through this area through here, out of the order block down here? We can, build some sort of ascending triangle and then actually push up. Absolutely. Like these are always things that we can have, but just the observation of it just looked a little bit crook at the moment, coming off there, nice big spring file pattern. So there is a higher chance that we go lower. Well, what would drag us towards that idea? Well, that idea would be the fact that we are so close. We didn't get quite a kiss there, but I'm gonna, I get a little bit OCD, coming down and actually getting a bit of a kiss off that area down through there. Would
Yeah, there
be
you
at
go.
least the first idea to actually get the developing monthly value area high. But like we can look here as well. Like we had that 1 hour, we came up, we put that bearish OB in there. We've rejected out of it at the moment. So looking down towards this larger order block through here, or this FVG down through here. There's a down block through here. So where that area there starts, and we look at the beefy candle, we probably use the whole range, but you can see obviously some people are using the body here because it bounced off that point there. Um, might even use that low there as well because it's lined up perfectly on that. And then we drop down those lower time frames, and that's where we're coming through weekly VWAP. So developing VWAP there, previous weekly value area high, which we also haven't. We've popped under it, but we haven't really got that outside break yet off it. If we were to do something like that, so I think that area there, if I leave that on, lines up with the zero of that sort of a breaker block, and could deviate below the developing monthly value area high. So we do get to that point. That's sort of just what I'm thinking there. What have we also got over through here as well? So previous day VWAP, that level comes down where the FVG start. These are your previous day VWAP. This is day before yesterday's VWAP through that area over there. I'm not used to using these pen tools. They piss me off. How are we looking? Yeah, so just let it cook for a bit. See if it wants to go a little bit lower. We're inside this FVG at the moment. There's obviously an order block through here. But yeah, we'll just see how it goes.
It's always kind of like that thing, like the way I'd look at that now is I think it originally bounced off the previous day value area high on the TPO, but
Yep.
then like now kind of you see it's rolling over and
Mm.
like with all those other pieces of confluence, you're saying, oh, it could come here, the developing monthly value area high. We've got,
Yep.
other ranges and stuff like that. Kind of makes more sense, like if we are going to like push for the New York session, it's probably going to come down, sweep London's low, touch into those other levels you've just mentioned there, and then
Yeah,
if that setup presents, that's like a pretty clean setup.
for sure. Absolutely. And something else as well. Just trying to see which is the best time frame. So if we just sort of scrap all of this low time frame shit, you could keep it on or whatever, but we should always be stepping up. We can obviously see we are still rotational with inside this block here. And we're right at the 50% and developing monthly value area high and that level through there. So it would be nice to get a little ping off it. They probably will be going for it. We've had a nice chunk of volume in the past, coming up for 48 hours, I guess, 24 to 48 hours. And then we can like, you pick something like that and you have a little bit of a look at it. So yeah, developing monthly through there. So yeah, like it does, again, the higher time frame obviously went in deep premium, but if we're looking at scalping, like it is getting to the point where it would be okay. Ideally, you want to be going taking alongs down through here. If you were to stick with your rules, that's probably what you'd want to do. But I'm sort of looking at, I mean, that's a 1 hour, 4 hour. We were to look at if I was just to look at this as an entire range, pretty much, and you probably use the whole area. You could use pretty much from there, pretty much from that there. So, and that's yeah. I mean, there's that like sort of FVG from there, then it sort of squeezes off from there, and then it sort of goes off from there. But you could go into that area up to that area there. But what I'm saying is through here, maybe you're on like a 2 hour chart. Yeah, 2 hour chart. That's the one. That's the puppy. And then you probably go off that there. That's a BPR through there. So that's a balanced price range.
Yeah.
We've
Yeah,
got the
that's
FVG
perfect right
down,
through there.
the FVG there. So, you bounce off the top or come down to the 50% of that. Um, and then also though, like, even on the 2 hour chart, we've got this little bit of a break, but it's been so chopped up. Geez, look at God, there's been some volume in here. Hey, it's pretty messy. To be honest, there's sort of order
Yeah,
blocks
since
running all over the
Sunday, it's been an absolute mess.
Yeah, everyone wants to push it up heaps higher, hey. Yeah, it
I
doesn't
just
hurt to
got
yeah, it doesn't hurt to go through
like,
a few things, like 3 hour, you got a breaker, you got a bearish block there. But yeah, just like, I sticking to traditionals, not everyone's going all these, you want to be looking at what people are saying. Um, we can look at like just the actual body on the yeah, it's pretty clean. Dropping down, deviating just down into this BPR, puts it in a buy zone just here. And again, though, we are just talking about scalping. We're not talking about going long due to the obvious. So 50% as well, coming in there. But if we just wanted to have a look at some old school, which fibs that I have on here. That's 6180, that's 66. So yeah, pretty much like if we swept down into this sort of um just below that order block and we did come back down, then that's putting us, a lot further down as a like an SFP of that was it 4 hour? And then we have a
wow,
look at
yeah.
that. That would be yeah. But obviously, like, it's been a bit choppy through here. What's some of the old school looking at old school stuff as well, like see how this is sort of just a little area of interest that could be further down through here.
Oh, yep.
Mm. So yeah, we've got that sort of just that downtrend, rotational with inside of this area through here. Um, and this sort of just goes back to what I was saying before about the daily, which was you've got your deep premium and your premium, and like coming down and getting one more kiss off that to push off it. And then we could also look at like where do we stand with the 50% just off this wick out of curiosity. Pretty much around that area too. But yeah, standard 1.5, so we could push up and we did find that we were sort of at a bit of a, so we're getting pretty close to that developing monthly value area high. Um, but as I said, there was, a little order block in here for now. So, there's plenty of times as well where it could just be like, it might want to come up and that's what I'm not going to get this drawing tool on, but it could want to come up and first. But yeah, we'll sort of just have to wait and see.
It's
And
just kind
that's
of
sort
like
of,
at that weird sticky point where it's like, are we remaining rotational in this composite? Are we going
mm,
to sweep and get the previous year, sorry, the developing year value area high or push up and out? And it's just in that like choppy zone where you don't want to be adding too much risk into the market. Yeah,
mm,
all the alts are coming like right into the levels ideally you want to be longing off.
yeah, well, that's it. And, we can also look at the moment of like, since the new week opened, imbalance down as of yesterday, obviously inside break, um, you know, and then out of the you draw a PD range in there, and you'd probably find that was around popped out of the premium or something. That was sort of where you had your entry. And then we've obviously come up and we've fought to stay imbalanced up. This looked really good today. It almost looked like it wanted just to take off, but I didn't care because it's just obviously it's deep premium. And then we can see here that we put the lower high in, right? And from there, that's obviously, signifying a bit of a change. Um, this could be an area through here, obviously, that we ping down off, which I believe probably comes in, yep, around developing monthly value area high. So this is one point that could try to take off again. So this is like when we're balanced again, but this is sort of when, um, just gonna, okay, can't use control Z on here for some reason. But yeah, this is one of those points where like, you do chop and you can take off from there. But the other thing is if we do eat a shit sandwich through here, then look where the five, the previous week VWAP is, but look where the 6.8 is currently. Well, that's currently right at the golden pocket. And if we are to be rotational, then we're to be rotational, right? With inside at least start developing. But then yeah, we also have that order block down through here as well. But we have some pretty relatively equal lows. So, I'd say that probably goes underneath that level. Would probably be somewhat cooked to potentially go a little bit lower. But again, anything can happen. We'll find it when we get there. But yeah, a lot of the
Yep.
time, like I'll just have ideas of these levels and scenarios. And that's just where, like, instead of just like punting for a random entry, I'll be jumping over to Autoflow. I'll be jumping over to like Velo. I'll be jumping over to Aga to have a look at the flows and all that sort of thing. So, yeah.
Absolutely. Well, it was really good. Like these ranges within the TD9 candles
Yeah,
and
yeah.
within like your order blocks, yeah, and all that sort of stuff. That's it's good to sort of wrap my head around that because that's something you've been pretty focused on for the past several months. And when I
Yeah,
first
big
looked at
time.
it, I
It's
was like,
well,
what the fuck is this? And then like the other week when I reached out and said, oh, can we have a chat? I was just like, I feel pretty comfortable with what I've got now, but and it's going well, but I know it can be better. So I'm looking for that next sort of added layer to build like a bit more of a bias and
yeah,
get
for
a bit
sure.
more confluence to try and get that strike rate working a little bit better.
100%, mate. No, it's yeah. No, that's awesome. But that's pretty much yeah, the PD range has just been like for me, it was just something just I don't know, like it's because all it is the whole time is we're just trying to read a narrative and we're trying to be just gauging, strength of something or weakness of something. And all you're doing is like, whether you want to use the PD range in a really higher time frame, as we just did, like on the daily, you can see where it's just basically climbed up to the 50 and cruised along and it's climbed up to the, come back down and retested off the premium and it's pushing up now. It's in the deep premium, but is it gonna, all we're doing the whole time is we're in these zones that we can gauge how easy it did something, how hard it did something, how much it's chopping around, but gradually, like um what is it? What do they call it again? Basically, like, we're like a rising accumulation, for instance, where like we're in like it's struggling, but it's rising and then it pushes out of it. So we're just being able to tell a story. Or like I said, like we can see a level that got front ran and then it pushed really hard out of it and it reclaimed a level and it's showing strength and these PD ranges mixed with the LTVW, it's able to tell us each time on the higher time frame, but then knuckling down onto every other little time frame and finding little PD arrays like your CS9, and then if it comes down and retests there, we know on the higher time frames it's still looking good for higher, or it's in a buy zone, and now it's in a buy zone on that lower time frame. And so, essentially what it allows me to do is, you know, I'll risk on at times, but I'm able to sort of look at these higher time frames and look at all these little scenarios and either be like, I have fucking no idea what's going on. So either I'm not trading today, or I'm looking for the most extreme part that I want to participate. And then with that, I can get surprised that either that was a good point to participate in, or I get stopped out because that such an extreme point of participation, the stop loss is so tight, and then it rolls through that. Then I'm like, well, thank fuck I didn't try and trade this today because I would have just got smashed. So it's allowing you to sometimes look at the higher time frame, roll it down into the lower time frames, and you may have woken up where you have now in the middle of a London session or something. I'm waking up, before Asia starts, and instead of just jumping in and just trading away, we're able to like pick up the larger pieces, the larger sessions, and all that sort of thing, and go, all right, today's pretty clean. That's where I want to participate. Set an alarm, go and do something, guess that point, and then your day sort of starts because you've already got that idea where you're participating and you're getting in off that, and then it just snowballs from there. Like the little things we were doing, where it's like, you are trading the lower time frames, you can be looking at the PD range and that sort of thing across CS9s and taking a bit of profit off and all that sort of thing. So yeah, that's what 8 years will do for you trading.
8 years, 10 hours a day in front of the screen, 7 days a week.
Pretty much. Pretty much, yeah. And yeah, honestly, it's got to a point where sometimes I do stuff and I make great trades, and if someone said to me, "How did you do that?" I'm like, I don't know. Like, there's extra things I'm seeing that's like now no longer even a conscious thought. It's very reflex oriented, you know.
Yep. Well, it
I
just
would never
becomes like second nature, doesn't it?
I would never say it becomes a feeling, but like I don't like using the word feeling because for new people, that's what we're trying to tell them not to do, you know.
No, but there that is like a part of an edge though. Like you
Yeah,
sort of
and
know you've been in
well,
front of,
it's
I'm
we
getting it a little bit now. When you see the candles printing, you just get a feeling like, yeah, this is looking nice and clean. This is gonna run. And then it does.
well
Then other
that's
times you're like, nah, I don't know what it is. This just looks like it's gonna roll. And then two 5 minute
yeah,
candles
you get a
later, you're like,
tingling in
yeah,
your
it
balls,
rolled.
don't you? Little
Yeah.
tingling
Just
balls.
I
No,
don't know.
but
I
it's
think it's just
like
like you
it's sort of it's one of those things where it's like when you're first learning, you need to like because these markets are designed to pry on our emotions, right? And our little reptilian brains are only able to handle such a little amount before emotion kicks in, and then you're just giving your money away. So to start with, it's really important to undo human nature, as fucked as it is. Like you got to get psychotic because you need to be going against like the littlest things is obviously like the amount of times you say this to people and a light bulb goes off in their head is buy red and sell green. And they're like,
yeah.
wait, fucking what? Like it grinds their head for a second because they're like, oh shit, okay. Like I see what you're doing there. And it's like then the next step is to be like where you feel maximum fear is where you need to buy, and where you feel maximum euphoria is where you need to sell. And then it's sort of like, so it's like then teaching them how to build framework, a playbook, build an edge that takes away that emotion. And it's literally just like, it's one time framing red candles down into a level, and it gets in that level and creates a little range. And it's just like, you've come along, and you look at the computer and you see these big red candles. And instead of being like, oh, fuck, sell my portfolio, you're like, oh yeah, I got levels here. Fuck yeah. Good time to get on the computer. I can actually find a good long opportunity. And that's what you do. You'll get on there and you just go, there it is. And then, you depending on what level of trading you get into, you're like, oh, it's a nice B-shaped profile there. There's open interest coming in there. We had a bunch of liquidations, silly longs. Um, and then, yeah, you just jump in and off it goes. And like, that's good on a technical point. But then this next thing comes along where it's like you've built this color shell around your emotions that you're all framework oriented, and then you have to like externally allow emotion to come back in, and that's like not your emotion, but it's the ability to be constantly saying from a third party, like from like a third perspective, you basically need to be like, how would I feel? How would I feel? How would I
Yeah,
feel if I was underwater?
that's a good nugget of gold you gave earlier. That's something that I never really thought about.
Yeah.
Like, how are these market participants feeling? Like, people have entered the
Yes.
market here, and now that price is retraced there. How are they
Yes.
feeling? How
So
would I
you need
feel?
to, when you see a displacement in a high, we're looking at a short, you need to imagine that you just went really heavy long above it. And then that hot prickles up your neck, like, oh fuck. Or the guy who's like, why do I always buy the fucking top? You know? So they're all
Yeah.
above you. So when you go short and you start freaking out, going like, oh fuck, oh, I got to get out of this short. I don't know. I don't know this short's gonna work. You need to objectively look at the price action prior to it and be like, do you believe that people exist above you that are going, oh, fuck? And obviously, we can use like lots of open interest above the high, lots of short liquidations because the shorts are now going to go revenge long, you know,
Yeah.
as well. So you've got like, and then these, there's bots that are designed, not just like smart people trying to capture little moves. There's bots designed to like capture every single hot moment of the pain of someone who's bought the top, who's just got liquidated, who's now going to go revenge long, and they're going to absorb all of that in limits. And then they're going to use their own power. And see, I'm not talking about like ICTs, algo banks and stuff, but I am still going to mention the fact of like, you know, there needs to be liquidity in an area to get in a large position. So as you said before, like earlier on, like I haven't run into the problem yet, but I feel like on weekends I have run into the problem where if you put too much size on, all of a sudden you're putting too much exposure on yourself. And so these big whales, like think like a whale and trade like a whale, like you and I can just market buy at any point of time, and you know maybe on a low volume 1 minute candle, you might influence the movement of that candle. But any normal New York session doesn't. I don't care. Like even a bit of size, over $1 million. Well, you look at how much is just on Bybit going through every level. Like you're just like one little million basically in there.
Yeah.
So we're not influencing it. But if you're somebody who wants to put a fuckload of money in, like you need to have liquidity to get that money in that spot without moving the market, exposing yourself. And then it needs to move to another point where you need to have equal to more to get it back out. So
Yeah.
when we talk about this, then we understand why we need the guys going, I fucking bought the top, the shorts who got liquidated, and the people who've gone revenge long. All three of those can fill some big, big players to reverse the
Yeah.
market.
I think it's the third last video towards the end. There's that
Yeah.
little section, think like a whale.
Yeah.
Because they
Exactly.
don't
So,
have like the luxury, like I think retail don't realize, like we've got a luxury. We can just enter and
yeah.
exit whenever and our order will be filled, like before we can
But
even
the
blink.
problem,
But as
the
you mentioned,
problem with that is a double-edged sword that like it would be different if we couldn't. Like, because, and it's like, and it's almost like why some like whales have a whole different like group of problems. Like we just have a problem of where it's going to turn around, but they're the ones who turn it around.
yeah.
So their issue is like, is there enough dickheads out there to turn it around here without me getting roasted on the other end of it, or without like over using too much to turn it around. So like I always look at like the perps and the spot, and there's some big players out there who deliberately use their spot to trigger their short. So like they'll push a market up and they'll wait for all the perps to be going long, and then they're filling shorts limit shorts off everyone thinking it's a breakout. And then when they're ready, they'll dump millions of dollars of their spot just to get it started. Like they'll be, doing that. Or they'll put themselves in a situation where if they haven't got their fill, they'll keep spot buying. I see big spot do it all the time. They keep buying into the high like an idiot breakout trader, right? And obviously it's pushing the markets up into their perp shorts. And then they might have a little loss, but they rip their market back out. Like, they'll pull their spot orders back out. Like so they'll be going market long on spot and then they'll just dump it all, or they'll dump it later on. They're just using that to push their leverage perps shorts, and then obviously their shorts make a fuckload money than any cost of the spot buys at the top.
Yeah,
So
it's
I'll
just a small
always,
cost of doing business for
yeah,
them.
that's it. They just pay like a more of a premium to keep the market filling up these big shorts. And then after that, all they have to do is basically just rip their spot that they've market bought in, which the CBD now goes down like that. You see a big spot drop, and then all of a sudden everyone's like, oh, like, well, fucking Bybit did some manipulation earlier on. Like that, not Bybit, Binance. Like I think Binance were where was it? I think it was just like yeah, it happened. It happened. And I could probably just quickly share this anyway, just for the sake of people watching. Let me see if I can share this without it looking too. Yes, on here at the moment. How's this look on the screen? Is it all right?
Yeah, that's good. Nice
Yeah,
and
cool. So
clean.
you'll see, like, obviously we had this is on the 1 minute chart. You see, we had this sell off, but you're going to see through here, Binance was obviously just pushing this all up through here, and then they just dump off straight away after that. So it's, just when you see little things like that all the time, you just see spots sort of like dislocate for a bit, but like their intentions deep down inside are obviously to fuck everyone up. Um, so yeah, you can see like Perp Big was pushing up through here. And during that time we had Binance pushing up as well. But during this time that the big people trying to catch off this wick, they would have had a fuckload of shorts limits that they would have just been controlling to suppress it, and then they just dump it off the other edge over there, and then it just cascades down, and like all of this makes money, and it rolls over. So just like yeah, little things like that is just constantly happening. It's got some little buyers stepping in here and spot big stepping in down here. And what did we actually hit from there? Probably jump out. And I may as well share on here and close you off. Have a bit of a look. Share. This big one again. Wherever it goes to. Here we go. Yeah, okay. So we haven't quite really hit yet down on the developing monthly VAR, sorry. Yeah, still rolling over a bit. But yeah, so that's yeah, I know I keep going back to the charts and stuff, but okay, we have a little nine. We're having a little rejection off that nine though. So yeah, we rejected that point there, which is that diagonal trend, developing vowel. Um, bit of an odd place to sort of bounce anyway, up here without rolling. But again, we know just below here comes in. Actually, which screen am I sharing? I'm probably sharing the wrong screen again, hey. Let me see which one I was sharing. Yeah, it's probably. Let me just share. Just gonna share the actual. Close you. Desktop one. That's what I'll share. Yeah. So what I was saying over here is we have that little diagonal down channel, developing value area low, previous day value area high, New York kill zones coming in. We do that nine, so we could push up and out of it, but um, yeah, I mean, would be nice to see to see more how we react down off that developing monthly value area high there, which also comes in as I said, like previous week, Valeria High, we haven't really given that a kiss either, and that comes down to that, like, kind of going over everything, over everything I said earlier about the BPR and stuff. So, there's plenty of times where like New York will want to send it all the way back up here first, and then actually come down, or they want to do more destruction, they can send it up first. But that's what I have for
I've
Asia.
I've learned I just usually do my best to sit out pre-New York and I wait to
Yeah,
see what New York does in the first hour. I usually find that first hour of open will like sort of let you know the direction that the rest of the session's going to go because I've just been chopped up so many
mm,
times entering, pre-New York or like halfway through London.
yeah,
So now I know unless there's something that's like really clean and really screaming at me, I'm just like, I'll just wait until like between 9:30 and 10:30 New York time, and then I'll make a decision.
yeah, 100%, man. No, for sure. Yeah, I do the same with Asia actually. Like, unless there's something really obvious, like when you first, depending, like, so for instance, if Asia say opens, you know, a couple of $100 below or above, um, like previous day value area, like the previous session, or like a composite or something, value area high, and then you just get that real clean, come down, give it a kiss with a pin bar or something. I'll just be taking that because that's obviously like could be an open test drive, just comes down, tests whether it's a breakout or a rotational trade on either edge. But yeah, generally if I'm opening really far away from that level, or if I'm opening like in a balanced area, you're pretty much just better. Again, something could be really clear, but you're just better off just to wait and just wait for like, even like ADR if it's Asia or London or New York. But yeah, for me, if it's ADR, um, I like to sort of just let that in a rotation away open up, and then sort of you normally find right before the ADR, the first like the hour. I think it's an hour, isn't it, with ADR? What's it, 11 through to 12, 12:30? Yeah, gone off Singapore time. Um, yeah, to 12:30, I think. You normally find like we had today, like a little pin bar with an SFP or something, and that can just be like a really clean setup to rotate back across it. Or we have a breakout on the other side and you wait for it to come in and get a bit of a retest. You can just trade it that way. So that all just comes down to patience. Um, a lot of the time with these things anyway. Mm. Very good, mate. Do you have any other questions that you have?
Nah, I was a little bit like I pre-written out a few questions which have actually answered them all. And I
Yeah,
was just
nice.
like hoping on my head, I'm like, hopefully we'll just start talking and then he'll just open up his charts and go on a massive tangent and give me some nuggets of gold. And that's exactly what you've
Yeah,
done. So
perfect. I'm good
for
at
me,
that.
it's been a successful session.
Yeah, well, like yeah, we got the MMWC, which is the Market Mastery Wealth Club now. So, and I know that you've jumped in there as well. So I'll be doing like at least once a month, every Wednesday night. I'll just be going in there and with those members and that sort of thing. They get a few questions like you've done, and I go in there and I'm just going to be having a big tangent, just open forum. People can ask me questions and stuff. So a little bit of a plug in this video as well when we release it for those who want a bit of extra hand holding and that sort of thing. And then you and I can every now and then I reckon we just jump on, you know, once a month or once a quarter or something, and we can just have a bit of a chat about the markets, or even we can jump on and do some market updates and that sort of thing together. Chuck it up on YouTube would be good.
Yeah, sounds good. It's hard
Yeah.
not to go on a tangent though. Someone asked me the other day, "Oh, why did you enter in a trade here?" And I was typing it out, and I'm like, "Oh, fuck, I'm half asleep. I can't be bothered typing. I'll just do a video. It'll take 5 minutes." And it's like 25 minutes later, you
Yeah,
know?
yeah, yeah, yeah.
It's
It's
like,
good.
"Oh, there was this here, and then there's this here, and then if you draw this from here and you look back at these trap longs over here, blah blah
Yeah,
blah." And I'm like,
exactly.
"Oh yeah,
Hey,
sorry. 5 minutes is 25 minutes."
that's why like when I did MM3, I tried to like structure it. I mean, I probably did a little. I wanted to like get the theory out without doing what I do. Like we all do it though, where it's like if I've got to be like tomorrow night as well, I'll be chatting with people, um, and it's sort of like I need to like keep their questions in mind and stay on task. Otherwise, like I'll end up 25 minutes down the rabbit hole talking about something completely different, which just stems off their first question. But it's like, okay, I'll answer your question, but now I need to explain like 50 other things for you to fully get your head around it. And then like I know people like you, and Jika, so you guys have got the mind that you can sit with me and you're probably just like, because you did it with the course. Like look at you guys. Like you were able to do the course and you were able to, you're doing order flow and stuff now. So you guys have that mind, but I worry about other people where I'll do stuff like this with them and they'll just be like, fuck this. Like I don't know if my brain can handle all of this.
Yeah, you need a certain like base to work off.
Yeah, I think I just need like I need to write a little AI thing that comes up in the corner, like off topic, flashing, just be like, anyway, that's for another lesson. Let's get back to what was the question again?
But it's a deep rabbit hole, like, and I'm going deeper
Mm,
down with like order flow and stuff now. And it was on the weekend, and I was like, okay, cool. I really want to wrap my head around this specific thing. And then just as I was like, oh, cool, yep, light bulb's gone off. Yep, I get it, I get it. Oh wait, what's that little thing over there? And I'm like, ah, fuck, that's another rabbit hole. I can't do this. It's
yeah,
a Sunday afternoon. Like I just spent 6 hours on this one rabbit hole, and it just leads. It's good because you're always gathering stuff, but it's
for
never
sure.
ending.
Well, what would be good? I think that we'll probably wrap this up soon anyway, and it'll be a long enough video. People want to watch it. But like another time, or even just a long form piece that I could do that I don't think I've really. I mean, someone's probably going to link me, which would be great for me. Besides, luxury, luxury has great EXO videos. He's one of the engineers over at EXO Charts. Have you followed any of Luxury's videos?
Yeah, I have.
Yeah, so I think he has a free course, but they're about to bring another EXO out. I think EXO 3 or something, which I need to look
Okay.
into. It looks hopefully because they got like my feedback and stuff on it, so hopefully it's going to be more user friendly. But what I'd like to do would be a video on at least clean up all of my templates and release it with a new template, like a mega template, because there's so many ideas I just haven't had the time to do. I planned it in Bali actually. I want to just really build this thing out to do like high time frame volume clusters and all that sort of thing. So like it's almost like this big all-in-one template center. Um, but just go through like all of it, if that makes sense. And I'll probably break it into like, if I'll release it for free or something on YouTube because it's not like I'm teaching the order flow, but more just go through like every single part of it and like what it actually means because I feel like when I first got into order flow, it's or the reason I'm saying this is what you just said to me was like you then see something and you're like, I've had that on this template for so long. What does it actually fucking mean? Like I
Yeah.
know what it means. It could be like a trade count or it could be a whatever. It's hard to say because I know them all now, but like how do I take that information and turn it into something useful into my trading? And I think that's the problem with a lot of it. It's just sort of like they could like I think if people did that and then use the templates, because like MM3 really when it was planned was for order flow to sort of be like very entry level, kind of like this is what it is, and here's like a couple of little things you can do with it. But when you really go down the rabbit hole of like, the footprint bar stats, and all your delta and all the things you can add to it, and you can remove things as well, or like your trade size, for instance. Like how I use trade size is I use trade size. So I think you'd have that on your template. Anyway, if you went back in the watching this video afterwards and look at when I have the trend reversal chart up down the bottom, I've got the T size, trade size. And if I see a large number, because I've got it broken up to more than 1.1 million down to less than 24K, if I see heaps around the million mark and it's gone into a high, then it can be liquidations. But if it's on open interest, that means there's a potential that it's only a handful or one big player offside. So the gold nugget you mentioned, where I said you see displacement and it's gone in and then it's closed off and it's created the FVG. So the third candle. So it could be a pin bar displacement, and then the next candle closes, and now we've got that FVG, and they were like just say like 5 minute candles. So there's 15 minutes there. That one person is sweating. not just a bunch of people who might go, I'm a fucking ape. And I've only, if it's a million made up of like 100 people or 1,000 people, there's less chance that that is the high because there's so many apes who go, I don't give a fuck. Or it's such small size trades, their stops could be all the way up here. But when you've got like one confined like guy on leverage with over $1 million or whatever, you know, sitting here, there's a higher chance that all it's going to take is for that guy to mark it out, and that's going to absorb a full 1 mil, like a large chunk. It's going to push the market down quite aggressively, that contract itself, when that
Ah,
OI
gotcha.
drops.
Yeah.
So that's what I sort of use trade size for when I see an anomaly stand out. But I can also use like when I see it high straight away as well, I look for liquidations. Like, and okay, so that's matched with liquidation. So it's probably like a really big player's just got taken out. He probably got hunted. Or if it's fresh OI, that's a large person who's now underwater that could get taken out. So that's just like I'll do a video on that, like little ways that I see it, that it's not all just sort of like I'm using that trade size to sort of just see to break up the participants and just how it's just going to be on the whim of like one or five people over 1,000 or 5,000 people who might or might not close their positions. So it's easier to drop 5 million worth just by a few people calling it quits on that trade. So hopefully that sort of makes sense as well.
Interesting. No, that
Mm.
does. Yeah. Ah, the weeds, never ending.
Yeah, that's it. But
Getting
it's
in the
sort
thick
of
of it.
yeah. I mean, the unfortunate thing is like our brains have only got like such a small capacity to be able to be running all of this all at once. So it's one of those things like it's like you've just got to like every time you cook something, you're not always going to use all the ingredients in the kitchen. You're only going to use
Yeah.
like certain ingredients for certain strategies. So it's sort of like you need to, a way of doing it as well as like a part of your prep can be like you're looking at the higher time frame to work out if you're in a discount or a premium, and then you're knuckling yourself down, and then you're looking at your imbalanced. Are you balanced? Are you looking at your TPO? Are you balanced? Are you imbalanced? But then you're finding you've got some bias behind you, some hypotheticals. We're trending some expecting trending behavior. We're rotational expecting rotational behavior. Then trending to rotational behavior, I'm only going to use these ingredients. So I'm not even going to worry about that today. I'm only going to be isolating the idea of like, that and that and that. And then
Yep.
that
It's
way,
about,
that's the daily strategy for a day trader. Like I'm isolating those few things because my brain can handle there's the price action. We get to a high, and then on a trend reverse, like something else as well as like, well, how do you know which ones to use? Well, part of your prep as well would be like we're rotational. I'm woken up. I'm going to look at last session and I'm going to go from left to right and I'm going to have a look at the footprint bar stats. So I'm going to see what has actually been highlighted today, what's been the flavor today, and that's what I'm going to cook.
yep,
Mm.
absolutely. Even, yeah, there's so much to it. Even just like speaking about like what happened in the previous sessions, like you can even just build a narrative from looking at the DR indicator, like, okay,
Yeah,
Asia consolidated and range, so that was accumulation. Okay, so London has expanded to the upside, so that's potentially manipulation. And now New York might open, sweep that high, and then fucking roll off.
yeah, exactly, exactly. So, and that's your time part as well. So it's just seeing if I've got from the Bali. So what assets I've got in here. Um, and I'll share this. Yeah, I mean, I'll just share the screen once more. Just share my actual desktop again. So, like, well, here's just like a cool little graphic of the premium midpoint and the deep discount. So deep premium midpoint discount, deep discount. So that's just that. Obviously, for those watching, that's just that little aqua and pink box I was drawing up. So obviously, like you got the full force of discount from a discount. Then at the 0%, you've got where there's going to be chop, where they're actually scrapping, and then in premium, you've got the full brunt, the full back legs of the supply. So the supply and the demand, and then that sequence of priority, which is more what we're talking about at the moment, is not a good image. This is a better image. Like market structure is obviously like is everything.
I
Like
feel like
not
this
trend
gets
reversal.
overlooked.
It's
Everyone.
the daily, the weekly, the monthly. Like it's the support and the resistance. Then the volume analysis as well, which can be brought in a little bit with CVD, can be brought in with open interest and stuff. I will include that because it is a part of volume. But just talking about volume in general, like what is the volume like? Oh, it's low volume going into a high. Does it mean it can't keep going? Well, yeah, it can if the volume picks up. But the current observation is it's low. Therefore, like there's not much interest in that area. That means like there's the limit orders are thin, but the market orders also aren't really there. It's just not. I want to see one of those candles with a unusual amount of volume spike, off a pin bar or something off the low, that's showing that like people are willing to push it higher and are probably going to DCA higher. Then time analysis is what we literally just discussed, which is the Asia, London, and New York session, as well as the TPO chart. I include that into the time analysis, obviously being a mixture of volume and time. Um, Combining the profiles together. We've got 16 days, we've got 3 week composite. Therefore, it's time that we've been spent rotational in an area. So, then those levels start to get brought into the chart. So we've got the market structure showing as the optimum trade entry off a pin bar on then on high volume. So I've incorporated the volume in the analysis and the market structure. The time analysis is telling us that we've swept a composite or we've, you know, we've, um, we've gone down and we've done a Judas swing for London, and now it looks like we're going to take out Asia and then probably put a temporary high in. So I know that that's going to be an isolated trade, but probably not a trending trade because New York's either going to roll over and destroy, and it's going to sweep that high and put in that lower high, or it's going to come back down and put a lower. It's going to put a lower high in, or it's going to come down and put a high low in, and then continue higher. So, the hypotheticals should tell us if we're rotational or if we're trending based on market structure, which I'd incorporate the LTVW. So obviously that's a part of like the morning or waking up having a look, are we imbalanced, are we balanced in the LTVWs? The same with the time analysis is telling us like, are we balanced or imbalanced based on composites and that sort of thing. And then the order flow is that final moment, the trend reversal charts, the CVD divergences, and that's based on obviously back to market structure. So we've swept a level that's come from our time analysis, our composites, or our original market structure analysis of the LTVW. And the order flow is telling me trend reversal, B-shaped profile, liquidations have gone in. We have large open interest of some big T size gone into the low. Then we've closed above the value area high. The point of control is in the low. I've gone long, stopped below the low, and then I'm sharing it with everyone. They're like, "How in the fuck did you get in so low off that pin bar?" And that is the sequence of priority. Just going
And
through that, but understanding that if I just do order flow, I will lose my account. But if I just stay on market structure, I'm probably as good as getting in way higher on a Morningstar reversal and then having such an area that I have to size down to cover a stop loss thousands of dollars away compared to having all of these running sort of together. And when they all run together, this is it. So it's your trend, your ranging, so you're balanced, you're imbalanced, your inflection points, from your created from volume, created from TPO, that sort of thing, the trading session time, understanding, what the Asia session, the London session did, and then the flow confirm. And you wind them all up and you do them back to front, back to front, back to front. So you're just kind of back to back and front, have a looking at them all. And execution being in red there is because order flow is that very last thing that I'm going to be using with trend reversal and Velo and looking at AGA and all that sort of thing. And
the,
that's a sequence.
that's it. I think like it's good how for anybody who's listening and your mind is melting a little bit is start at the bottom of the pyramid, just like market structure. I think like at least for me, when I started doing the course, I got so caught up in like Fibonacci, long-term VWAP. Oh, what's this Oxford market theory? Oh, now I'm on order flow. Oh, TPO composites. And I'm trying to wrap my head around these advanced concepts. Yet I haven't wrapped my head around the most basic yet most important concept, which is market structure, which is
Yep.
pretty much everything. Without it, everything else above means nothing.
So I had a really good understanding of the volume, the time, and the order flow. And one day I decided just to deep dive back into market structure, which is just the 101s. And I was trading the 1 second and the 1 minute charts and absolutely destroyed. And I knew everything like we were rotational. I knew everything, but I just literally out of in silico alone, like with nothing else, just knew I was in this little area that I was able to get in, out, all over the place. And I was able just to trade, you know, good little runs, just scalp, 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 scalp. And that was literally just because I, even, I think this was in the 7 years in. I just went back and I just realized that like market structure had just been had been something that I'd learned, but just something that had just gone by the wayside where I just hadn't really been consciously thinking about it. So I just went back in and it was I think it was actually just really thinking about low resistance liquidity runs and high resistance liquidity runs with inside PD ranges. So understanding like both sides of that, but even with inside like a 1 hour order block, I was still able to like trade that rotational manner. And then getting outside of that, I was able to then see the outside break and go long off it and then mark up towards, and that was where I'd hold it up to like where it becomes high resistance liquidity run, which is a higher time frame FVG, and then I was able to short it and then go back down through and then find a lower time frame order blocker inside and then trade all of inside of that and that sort of thing as well. So yeah, that's pretty much like market structure essentially, and like how
Yeah.
I neglected that. And then like I got really profitable again when just looking at market structure. So like to reaffirm again, like that order flow part, I had a really bad point of trading, like, in my early few years, to the point I almost wanted to give up. But the problem was I went back to thinking market structure was just like such a beginning concept. I had order flow. Why would I need market structure? But the problem was market structure was and will always be the most important part of trading. And that's why I said earlier on in this, I said, when we're doing order flow, right, and I'll find a B-shaped profile and I'll find the POC in the low and the price breaks on the outside of the VA and the liquidations, et cetera, et cetera. And then I get into the long and then I put the stop below the low, then I close it. Like, well, I don't close it. I've got big screens, but like I just don't look at that anymore. I might glance at it because I can. I don't have to change the window, but for someone on a laptop or something, just just minimize it and go back to trading view now. Because trading view is just going to make it so much easier to pick the next level. Now, if you're up to TPO, then obviously the TPO levels are going to be the ones in the LTVW combined are going to be, well, that's where I'm going to be putting my take profits. That's where I'm going to be looking for, the first troubled area. That's where I might want to, then that's when we get to that level, then what I'm probably going to be doing is then opening up the trend reversal again. And I might go, well, I actually just noticed on TradingView A, B, and C at this level. And I'm going to just put that as a level on the trend reversal. And when we get to it, then I'm looking for like a P-shaped profile or something like that on that level, if that makes sense. So then I can monitor that. But then I see it shoot through that level. We're above that level now. So I'm going to then use trend reversal again to babysit that area. And then it shoots off from it. And then what am I doing? Closing the trend reversal down again and going back to trading view and having a look for that next level. It's more aesthetic, it's more simple. There's not numbers going everywhere. Whereas if you're looking at every single trend reversal candle, the only candles that matter are those on inflection points.
Yeah,
Every single
exactly.
other, and then there's the mousetrap setup as well, obviously, where we hit the level and we go along sideways for a bit, and then we give one final dart, which is just accumulation, manipulation, distribution, which happens on every time frame. The 1 second, it happens on the weeklies, it happens on trend reversal, it happens all over the place. And it's a mousetrap setup that we call it in order flow because order flow is one of those special little clubs where we just decide to absolutely rename everything, So it used to be a support and resistance, flip. is what we would call a market structure flip. It's just an SR flip. Um, and then, LTVW, it's called an inside and outside break.
Yeah.
And then what's it? Oh, and then you can say it's marking up or marking down, or it's imbalanced up or it's imbalanced down, or some people say ranging, some people say bracketing, like
So many names.
it's so many names for like just I swear, like all these things get like little cult followings, like ICT, SFP, swing file pattern. Oh, it's a turtle soup. Like fucking where do
Yeah.
you draw the line? Like it makes it really hard for beginners to get in. And I don't know if it's by design. They deliberately just want to make it seem so hard to learn and grasp with so many acronyms and so many different names for things that they just make it really hard. So what people end up doing is going, you know what I'm going to do? I'm going to draw a fucking triangle and I'm going to go long when it breaks out of that triangle. And then it's
Yeah.
just like the worst thing you can fucking do because, like, without understanding all of this, you realize not every triangle is made the same. Because if every single triangle broke to the upside, then you and I probably wouldn't be talking because I wouldn't be bothering teaching this stuff because we all just draw triangles and they always break and we're all rich. But then, as well, 101 for a lot of people. And this is why with MM3, I think it was the second lesson in, or maybe it was the first, I can't remember, but I went so deep into how markets work without calling it auction market theory. I just needed people to understand how market orders exist and limit orders exist and how if people stop market buying and selling, then the price would go sideways forever, you know?
Yeah.
So it was really important for people just to understand market mechanics. Um, yeah, just yeah, I've gone on a bit of a tangent again, but yeah, just based on the fact that like yeah, you see a triangle or something like that. Well, I'm going to be using trend reversal, and I'm going to be looking for trapped traders basically. The moment it breaks out to go against that triangle. So that's why I see the patterns. I don't draw the patterns in. I use the horizontal levels because at the end of the day, it's just nothing's going to be perfectly clean, but that level is basically are you above or are you below it? Um, and yeah, that's pretty much it. So I think like,
Well,
for people looking at the screen right now and they see the sequence of priority, um, it's just like all four of these have their place and order flow is like even TPO, I think, is important for people to learn. Order flow is probably not the most important for the higher time frame swing traders. Obviously, like they're happy with the 3 day Morningstar reversal, get in. They're just using spot. They're happy to hold it for a cycle, and I understand that. Um, but then the flip side of that is like what I always like to say to a swing trader is, okay, so where the fuck are you getting in and out? Like, how do you know? Like, how do you know it's the bottom? How do you know it's the top? Like, and that's where, like, if you have a really, really good understanding of the market mechanics, a really, really good understanding of the order flow, the time analysis, and all of those sorts of things, um, it almost, it's almost just like that knowledge, even though it's so granular and so
sorry, one
time
second.
frame
What's that?
based, it,
Yeah. Oh, hold on. I'm just gonna keep talking. I'm just relocating.
no, you're right. No worries at all, man. But yeah, so essentially what I'm getting to is like, even for a swing trader, it's like, like subconsciously, you're going to get to a point where all that all that knowledge that you learn and understanding the lower time frames, even if you're not trading the lower time frames, when you do get to those higher time frame, you know, buying the bottom of a bear market and selling the top of a bull market, it all just sort of clicks and it all just sort of makes so much more sense. So yeah,
Absolutely.
my
I
point
think
is
as
at
well,
least.
the to be able to use order flow and that I understand it's not for everyone. And that's the amazing thing about trading is there's so many different styles and there's so many
Mm,
different ways to make money. But just kind of like at least the approach I've taken is I have a large portion, my largest portion, which is just spot buy and hold. I
mm,
bought most of it like back in the low in September around 52K, and I'll just sell that when we get some big news event or something, or we feel
yeah.
like that.
I think like
And then
yeah, I was gonna say like the equivalent of TPO charts for someone who's not interested in delving into any of that sort of external software that we're using would be Wyckoff, would be the Wyckoff schematics. Because I mean, realistically, like the UTAD and the spring and that sort of thing, even though it's just market structure based on a higher time frame, and I haven't yet done this, but I think we should. We should find some of the traditional wick-offs, whether it's on stocks or whether it's on Bitcoin or whatever, where it has sort of put the highs in and the lows. And we should go back and look at the monthly, the weekly, and the daily composites, and we'll probably actually be able to line it up perfectly, where we saw like, higher time frame P-shaped profile off the top or whatever, and that could be,
oh, I have no doubt.
a 2 week composite that's a P-shaped profile or something out of the top of like a 2 month right, composite as well. And it's like boom, 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 like you line it all up. And then inside of that on the daily, you could diagnose what happened inside that P-shaped profile and you could knuckle it down even more. And what would still make that better than wick off is like you're not doing the wick off. Like you're aware of the wick off. It's very easy. It's just basically four lines that you're drawing and dividing it up into the actual schematic that you think's happening. But as the schematic is evolving, you're actually getting that inside information on those candle shapes and the delta and all that sort of thing. And then when you do see that UTAD going in, instead of waiting for the UTAD to completely go in and fall back in the range where you then sell your bag, well, you could actually think to yourself, this looks like this schematic. Has a potential of a UTAD, and obviously the risk is it retests the top of the range and takes off even higher. But you could do everything that we do in the TPO charts to then go, we could even start breaking out the volume clusters and we can break out, ladders and stuff in order flow and we can go, look across spot and not just perps, but the spot, they've got spot on XO too. We could go look at, how much volume and look at how many fresh contracts and look at how many people are trapped above here. Therefore, I believe this is a UTAD. And if I'm wrong, I'm still getting out here early. And then if it does bounce off that bottom of the range, like until we're above that, I'm not willing to participate because I just know, like we discussed earlier, how much pain that people are in. They're going to be so many people that like there's so much supply now above this area, and I think this is it. And like that's why I think you're not waiting for a day or two to sell the all-time high. You could be selling it within like, that day or at least the second day. You could be selling it within, and then, a week later the UTAD's gone in. If it is like a very large, sort of shooting star reversal or something like that. So it'd be pretty cool to see like coming up. I think like, once we break this all-time high and we know that we're running off and the alt market start, the full bull market actually happens where, altcoins they're all running off and dominance is dropping, etc. I think we could definitely, and I'm sure Kyle's going to be all over looking for that's where he starts to really whip out the wick off and that sort of thing. So when I think he starts to spot his wick off that he's good at, I think that's when we should start building a bit of a composite based around that sort of structure and what he's looking at and what's forming. And then I think we should see if we can, that might be the place where we go, fuck it. Like it also stops you being greedy, because you're not,
Yes.
you've done so well and it's like, maybe it's not the all-time high, maybe it does run a bit higher, but it's like you just sold out, but you gave yourself reason to sell out. You didn't just sell out just based on the okay, I think this is it. This is like, they've got a lot of data behind you, giving you confidence that it's time to get out. And, if I'm confident enough, I'm just going to load up a really, really fat short and see if I can hold it all the way to the bottom of the bear market.
Oof.
Yeah.
Yes, that would be nice. Like the long that you got on from the what was it, the Japanese yen carry trade
Oh
when we
yeah,
were
yeah,
mooking
yeah. A
off and you
couple
got
of
off
couple of
the
bucks. I'm good at it.
previous.
It's yeah. It's oh, yeah. I'm not bad at nailing. Well, like I was one day off buying the all time low. That's why I got this role in market mastery. Yeah. I went
Well,
on
because
whenever.
you posted on Twitter or whatever saying, oh,
Yeah,
I,
I
I
posted
think
up
it
on
said something. I
Facebook.
feel like Bitcoin wants 20K or something.
Yeah, 25K, and it went straight to it after that.
Yeah.
Yeah, so it was pretty epic. Yeah, so I made a nice bit of money. That really set me off with money that I didn't have to put any money into the market. I pretty much just made enough from there just to roll it and roll it and roll it and roll it, you know. Like I mean,
Yeah, very
I got
nice.
spot Bitcoin that I've been holding for years and you know, sold out and back in. But yeah, at least for the perps and for the fun of the things that I do, I've just been able to just grow that and grow that and grow that. And that's just pretty much just what I've been doing nonstop. So, you know, my wife's always like, why aren't you sizing up? I'm like, risk management. Nah. Like when I'm scalping, I just stick around one Bitcoin. I can put a lot more on. I mean, I'm on a two Bitcoin short at the moment. But yeah, I generally, I think the most I've gone up to is about a 10 Bitcoin. But yeah, I like it would be nice to short a 10 Bitcoin from the top or a ten Bitcoin from the lows and just hold on to it. I mean, I don't know what funding would do to you over time. Probably ream you a bit, but you know, if you keep the leverage pretty low so you're not borrowing too much, it probably wouldn't be too bad. Just, you know, I'd probably put a fair bit on like a short or something, but just have like really low leverage. Just that way you're borrowing a lot less.
Yeah,
Yeah, because obviously the funding, the more you're borrowing, the more that's not actually your money, the more the funding kind of rips into you. I think I believe the mechanism works that way anyway. That's why I say,
yeah,
yeah, but yeah, at the same time, it'd be, it's gonna be good. It's getting, all this stuff's getting really fun for me at the moment. So see how we go. I just know I always start fucking up when I just decide to. It's not that I'm breaking risk management. I just start to. I mean, it was years ago I started doing some real like bigger things, and then I kind of put myself back a bit because I was just being a. It's basically a thing that happens where like because at the end of the day we're human, we're emotional. Like it doesn't matter how robotic you are, and I think I'm more the most robotic I've ever been at the moment, and the wisest I've been at the moment. Like instead of forcing trades just because I'm the guy who does low time frame trades after Bali, I haven't really been trading that much because I just know that like there's so much going on, so much of my attention's not fully in the charts as it should be. I mean, like I haven't even had time to like build out my templates again and redo all my composites and stuff. I like to just spring clean every now and then. I haven't done a spring clean since before Bali, so how am I how am I going to size up if I can't even get, you know, the 101 of you know, the housekeeping right? So, but yeah, I do plan on getting there to probably eventually start sizing up some of these positions. And I feel like my mind is finally there as well.
yeah. Well, that's the wisdom of knowing how you operate and how,
Yeah.
like, within the markets, knowing, okay, like now's not the time. Like, same with Slimy going, like, oh, okay, my strategy using this indicator like this, it works in a trending market. And right
Yeah,
now we're just
exactly.
ranging and doing fuck all. So I've got to switch to a different strategy.
That's the part about being wise is just like it, I mean, you take out ego straight away. Like it doesn't, there's no place for ego because you'll get a strategy that will work for like 1 week and it'll make you so much money. And then you start gloating and bragging how fucking good you are. And you get cocky and even if you're not vocally cocky, you're cocky in your own head and then you get rinsed the next week. So like,
Yeah.
you know, you know, you would have heard of it. It's called edge deterioration. So it's like
Age
there's no
deterioration.
such thing as one strategy or one edge or one playbook. Your playbook needs to be dynamic. It needs to be, and you know, the thing is you need to understand like how to be able to realize that it's deteriorated as quick as possible. And then you need to be adaptive as quick as possible. Maybe not as quick as possible, but you need to be adaptive, so we won't say as quick as possible, but be adaptive to know when it's time to stop and wait. And what I mean by that is it's like you're doing really well, and then all of a sudden what was working isn't working. And then you need to go, all right, now I need to go back into like an observer period where like I can either continue trading, but I've deliberately cut my size down by 10. So like essentially for every 10 losses, it would normally be one win. So like you're allowing yourself to like you're buying some runway to still have skin in the game, but you're actually modifying that strategy or applying a new strategy. Or observational as far as like um you're doing the opposite of what others can't do, and then is you don't always have to be in a trade. And you know, it
Yes.
took me years and years to get to that point, which I'm there now. I can sit flat for 3, 4, 5 days now, and I quite enjoy it. It's just not stressful. But back then, it was just this constant state of like, if I looked at my positions and there were nothing in them, you know, I'm not really counting my spot positions and stuff. I sort of send that off to the trees, and that helps the itch a bit, just knowing that you have some skin in the game. But like with your perps, for me anyway, it's just like I needed to see at least a position loaded But now it's just like things start just turning around. You have a bad session or two bad sessions back to back. You're just like, all right, enough. Like I'm gonna go and mow the lawn, and I'm gonna be more observant. I'm not gonna sit here for 48 hours staring at the candles trying to create a new strategy because I will get in the market. I won't be able to have that
Yeah.
kind of self-control. But I'm gonna go like get up and I'm gonna look at the market and see how it opens and try and get a bit of a read on things and go observationally what's gonna happen when it hits here. Okay, I thought it was gonna do that. It didn't do that this time. I'm not ready yet. Now I'm gonna go mow the lawn, or I'm gonna do some chat to some members, or I'm going to go and do whatever. I'm going to go out to the shops or whatever. And then when you're coming back, another session's passed. It's now late London or whatever. Now, what's happened in that time? Is there anything that I could have done in there? Would my strategy have worked? Sort of would have worked, sort of wouldn't have. Why isn't it working, etc. So that's like really important to, it's not going to change week by week, but you will have like times like where it's trending or rotational. That's the first thing. It needs to be two completely strategies, and that's what the LTVW does. And to keep you out of strife, you know, you go in the morning and you go, all right, we opened up rotational. I was doing it over the weekend. I haven't upgraded my channel for a while, but I was like, it was kind of humorous as well at the same time. I was like, we're rotational within the whatever day profile it was, the previous day profile and the 16-day profile, and I just keep drawing the three lines, and then like I'd update like
Hold
10 hours
on.
later.
Sorry, I'm gonna have to cut you off there 1 sec. Hey, what's wrong?
Too easy, mate.
Done. Oh, I thought. Okay. Oh, my
You're
wife
good.
just dropped like a whole saucepan of hot water all over her hand.
Is she all right?
Yeah, she's all right. Are you all right? Ice. Lots of it.
Cold, run it under cold water first.
Yeah. Yeah, she's just done
Um,
that. Great
yeah,
way to start the
perfect.
day. Trying to make a
Yeah,
coffee
well,
and
we'll
spill hot water
probably
all over yourself.
yeah, we'll probably finish up soon. But yeah, basically, yeah, just where were we again? Um, Trying to think. Yeah,
Just
basically, yeah,
knowing
it's
when to be in the market, not be in the market, and then
yeah. Oh, that's right. Just
observing and being like, okay, well, this is the strategy I need to be using now, and that one that I used for the last 2 weeks isn't really valid for these conditions that we currently have.
because yeah, I was just doing where did I start doing it? Yeah, it must have just been these two posts. I probably put a few more through, but like basically just saying we're rotational in here. We're rotational within the 6, the 16 here, and then whatever I said there. But then I did a few in the actual group. I didn't keep filling up my thing, but then I was just basically saying rotational. And it was basically just like you could do it on the TPO as well, but it was just like we just remained bouncing between that rotational. So like just at a glance, just those simple things is, you know, I'm expecting, and this is the a monthly where we are rotational. So until we break above there, I need to expect that we are rotational. So that in itself is a strategy. Like I'm just expecting to be a part of the responsive selling and the responsive buying. Like, and I'm allowed to get stopped out. I'm proud to get stopped out. If I'm just buying willy-nilly in the middle of fucking nowhere and getting stopped out, I'm an idiot. I should stop trading. So, but
Yeah.
then you do finally get stopped out when it breaks up to where it should
Hey, your mic's dropped out.
have been responsibly selling.
There we
Let me
go.
have a
That's
look.
back now.
Back now. Yeah, probably just a bit of a
Yeah.
connection. But yeah, essentially it's just like, if I trade those inflection points back and forth, back and forth, back and forth, I'm going to be profitable. And there's no thought that goes in. That's just that strategy. That just goes into it. And eventually when you're wrong, if you're wrong once out of the five times, then that's fine. And then you're able from there to join
Your mic's, I don't know if you can hear me,
in
but your
with the
mic's, oh, there we go. Your mic's dropping in and out at the moment.
is it? Let me have a look.
Yeah. There we go. She's back now. Hey, I'll actually, I could be here all day, trust me, but I'll head
Yeah,
off.
no,
I'll just
mate.
check on the missus. She did spill quite a bit of boiling water on herself.
Let's
Um,
call it for now anyway, mate, because I think that's more than enough content, hey.
to be continued.
Absolutely. No, sounds
I
good. Great,
appreciate your time. It
great
was good,
chat.
mate.
Easy, mate.
Alrighty. All
Have
right,
a
mate.
good
Have a
one.
nice evening. Thanks for your
Yeah.
time, and I'll see you in the
Have a
Discord.
great day, mate. Happy trading. Catch you, mate.
See ya.
See ya.